Okay, and we are live, and I will fix all the things literally in real time. It's
All
kind
right.
of wild, Roy. I literally just got off a work meeting. Like I was working from home, so it's kind of easy. But I got off a work meeting like 3 minutes ago, and now I'm like on a stream. But we're gonna have Matt Money join us, and I'm gonna fix these while you
Yeah,
talk.
and while you're fixing that, just as an introduction, guys, this is Bootleg Weekly. I know many of you have been joining us for a good long while. As a reminder, we have a set list of topics that we'll discuss. We try to interact with you guys as much as possible because that's actually what makes the show a lot of fun. If it was just us hanging out, it'd still be fun, but not nearly as much. So tonight we're discussing Tesla's new model, OpenAI, lots of news there. Rocket Lab once Tevis actually sends the link to Matt Money. AMD and the OpenAI news, Oracle news related to that. And we have to discuss also some SoFi and also Pain, actually not so much Pain now, PayPal. So once we get through those as well, as you ask questions, we'll interact with you. Other topics are also up for grabs. Usually the last 30 minutes or so of the stream, we take your questions. Sometimes the answer is, I don't know, but we will answer those in rapid fire, which for me sometimes means like 5 or 10 minutes. Especially when I start talking about PayPal or air test systems or something. Tevis, how are you?
PayPal.
Yeah.
Okay, let me fix this camera if we're gonna do this configuration. Holy man, what a time to be alive.
I guess blurry. Let me.
So, Roy, we can do members only live streams now. I just see it as an option on YouTube. That's kind of cool. I can switch this to members only live stream. So that could be, I don't know how it works for multi streams, but we might have to test that out. That could be fun.
Yeah.
Yeah.
Maybe over the holidays, we'll have special members only.
Yeah.
Yeah. I don't know if it's my camera, guys. I think it's probably my internet connection. We pay top dollar for fiber, and it has been disappointing as of late. So if you guys can hear me, I guess that's what counts the most. But
I guess you should move to Canada, man.
Yeah, I get real fiber optic and internet.
Yeah.
Yeah, we're supposed to have these guys come out and take a look at things. Like it shouldn't do this. So hopefully I don't lose connection either. But yeah, it's not Starlink. No, it should be something. It's called TACUS here in Houston, and it's reliable. We've never had it go down, but it's been doing this as of the last week, especially bad. And I'm not at home. I'm working all the time, so and my family has not been around long enough for them to be here for that. So anyway, what do you want to hit first, Tevis?
I think let's hit stuff that the two of us, can talk more about, and then when Matt comes in, we can keep some topics that like engage Matt as well.
Yeah. Okay. So that would be PayPal that Matt would have no care for at all.
Yeah.
Probably air test
live matter, but
yeah. And he'll, he might care a little bit about like the Oracle stuff and for sure Rocket Lab and maybe a little bit Tesla too. So is Matt team BMNR too?
Actually, interestingly enough, I think Matt has a bearish take on BMNR, so that's gonna be really fun.
Let's save that then.
Yeah.
All right. So okay. Let's then start off with PayPal. I'm probably not going to share too many links just because for some reason my connection is terrible. By the way, if my camera starts looking good and it's less blurry, let me know. And that way maybe I'll start sharing some stuff. But regardless, like it's run up for PayPal a lot. Over the last 2 weeks, there was an interesting sentiment shift that I saw on X and social media. And I was like, I don't understand it, but PayPal would have these moves out of the blue of like 5% up or down for no reason, no news. And I'm like, that is not normal. Unusual options flow as well. A lot of people say, oh, somebody knows something. And maybe that's the case. Maybe it's not. Honestly, if they weren't executing, I would leave them. So they are. The stock is not or has not been until recently. It's now mid 70s, which is nice. Still down like 10, 12% year to date. So it's been an opportunity cost for sure. A couple of big pieces of news, Tevis. One was related actually today. Basically, they've been launching segments of their advertising business. This is one that they announced today that won't launch until January or early next year in the United States, and a little bit after that, United Kingdom and Germany. Now, they've launched parts of their advertising business already, but Alex Chris came from Intuit. He's a small and mid-sized business guy. He basically ran half of Intuit, and that was his focus. That's his heart as he came over to PayPal. Really good fit for the company. And so when they were entering the advertising market, they're like, okay, this is highly lucrative. Come on, TJ. This is highly lucrative, high margin business. They're sitting on this huge amount of data, but they didn't want to just sell it to other companies. They actually said they would not sell people's data. They would never do that. But they would build an advertising marketplace using transaction graph. They know, Google kind of has a view of who you are, like you guys probably see me right now, very blurry, but you can kind of make out some things. OpenAI and some other like very personalized apps like PayPal actually see more like what you're seeing with Tevis, that it's very clear and crisp. That's PayPal's view, and actually maybe one of the clearer and crispest views. Like they know both sides of your business, both on the merchant side and also on the consumer side. So they know a lot about you if you let them. And what they're able to do is offer a high amount of personalization also as it relates to ads. And so they don't sell your ad business, but with small and mid-sized businesses, they're actually able to now enable PayPal ads on their own platform and website, which is really interesting because you and I, Tevis, have talked about the shift that's happening in the web of a lot of agents that are out there and fewer human eyeballs, and how disruptive that can potentially be in the web and also for the existing advertising model. Now, this is one that small and mid-sized businesses are able to offer on their own website. It seems like it's going to be monetized, and there's no cost to offer it. You just put it on there, and then you also put limits on it. So the example that they gave was like, if you're a small coffee shop and you want to offer PayPal ads on your platform, you basically can say who can and who cannot advertise. So if you're like, you know what, we're a coffee shop and we really shouldn't let any other coffee people be on our website, that's a good call. You just block that out, and boom, all of a sudden it starts offering different products, usually related to what people that are consuming that brand may also enjoy as well. And again, when I go on there, it knows me very well. So it's like, okay, Roy likes this and that and that, so here's some ads just for him. Now, there's a lot more of the advertising business that they're serving up, but I love this. I love our small businesses. And the way it works is basically, if I click and actually buy something on that ad, then they actually give a cut to the business as well. So goes right there into your PayPal wallet as a business. And I'm like, okay, that's actually really cool. They're doing a lot more than just that, but that was a piece of news today. The other, there's a lot of chunks. They've announced some massive partnerships in the Middle East. I'm not going to go on like the granular level and everything, but basically PayPal World and also what they're doing in the UAE is very much worth attention. And then lastly, yesterday was one of those things where short term, but it's differentiated, but there is some overlap as well. Anyway, the buy now, pay later product that they announced, or we're not product, but they said they're going to have 5% cash back for those using buy now, pay later on PayPal. 5% cash back gets people's attention. Now that in net, it's through the end of the year, I don't think brings them any bottom line dollars, but it generates top line revenue significantly. They charge 4.99% for using buy now, pay later for the merchant. And of course, they're selling, they announced a deal much like SoFi with Blue Owl Capital to actually sell some of their buy now, pay later loans. And so that's collateralized right there. So they can basically do as much as they want. It's a $7 billion deal, but that's still quite large. And also PayPal can hold some of these as well. But what they're able to do is, the longer term loans that are on there, they do have interest as well. So net, this is probably something that bottom line doesn't do anything for them through the end of the year. Top line, it accelerates growth. And it also gets people basically using the buy now, pay later product. So that's been one of the criticisms of PayPal is, okay, you're not really focusing on this product and everybody else is so focused on it. And your top line growth is lagging. So I'm like, okay, this is actually really good. It's very timely. And of course, in the new year, they no longer do that 5% cash back. That means growth will slow some at that point, but it'll still be higher than where it has been before. Mostly it's giving awareness to that product. So a lot of other good stuff too that we talked about in the past, but that's really the shift over the last 2 weeks. And yeah, we're mid 70s. Doesn't feel expensive. It's not expensive, honestly, right here. But it's been an opportunity cost of date. I still think it might be until Q4, which is in January for their earnings, late in January, where they actually really break out, because that's when they can guide on the whole year. And some of these are just a little bit early, like, when they're saying that they're going to launch something in January, you're not going to get revenue in Q4 for that. There are some things that are giving them a lot of revenue in Q3 and Q4. So anyway, reacceleration, top and bottom line, a lot of new products and innovation. And then there's two big announcements that are pending for PayPal as well that'll likely drop between now and the end of the year. Not insider knowledge, just they leaked something on LinkedIn and they shouldn't have done that related to Venmo. And then PayPal world is a lot bigger than anybody is thinking. And they will officially launch. That actually had UPI integration announced today. That's growing and blowing up. But there's going to be an interesting announcement around that, I suspect, by the end of the year. Very interesting.
That's cool. I mean, it's like, I think you nailed it, right? Like opportunity cost on PayPal, where even after they launch these new initiatives, first of all, it's not going to be accretive to the actual financials immediately. It's going to take a couple of quarters to ramp up. It's good. They're going in the right direction. I think they're doing some innovation, but I don't know that the market is actually going to give them the respect that they deserve or want. Do you expect anything in earnings are going to drop that's like maybe not a product now? Like anything that will move the stock significantly will drop in earnings?
I think that they'll increase their guidance for Q4. They didn't really do that for Q3. The tariff stuff, they kind of kept it the same. Things are looking pretty good on the revenue standpoint. The buy now, pay later stuff, the Venmo stuff, it doesn't hurt. So I think that'll be good. But again, I think the big splash is going to, and they'll give some early reads maybe. The big splash is going to be that Q4 in January. That doesn't, the stock's going to do whatever. I expect it'll probably be range bound, maybe hitting as high as 90. Like, who knows? It's a bull market. So I could be surprised. And in the PayPal World announcement, and I don't know, they're putting up stuff out there that I didn't expect or predict. A lot of stuff that they're putting out. Some of it, like the Google partnership that they had, where Google had basically said that we're going to make PayPal a key payment service provider. Initially, the market was like, oh man, that's awesome. And I was like, this is actually really good and significant. And the market's like, it doesn't matter. It's PayPal. Like, I don't get it. And then all of a sudden it started running, like 2 weeks later. It's because SoFi Insider must have tweeted something, I think. But no, I'm just kidding.
Yeah. So are you buying more?
I bought some on Monday, some leaps, and I'll probably roll some. I don't know. I'll buy a little bit. Well, actually, I probably won't. No, not that it's run now. I have a large enough position, especially as it's going up. It's nearing, it's probably like 16 or 17% right now in my portfolio. I shouldn't. So no.
Not that it's run now, this guy says, because it went from 67 to 74. He's like, oh, no. PayPal ran $7. That's too expensive. Too rich for my blood.
Well, so it's kind of like SoFi. SoFi had fallen under 25, and I'm like, if I didn't own SoFi, if it was not my second largest position, I'd buy right then. But the thing is, when you have a massive position already, you want a screaming deal that's just stupid in order to add more. At least that's the way I operate. It's kind of like you buy SoFi all the time, I know, but like you with Tesla, like you still own Tesla, you still like Tesla. It's very expensive right now. I don't think they're going to be adding, but if Tesla falls to like nothing changes and it falls to 150, you'd be buying Tesla. But you would want a pretty big discount because it's a large position for you.
Yeah. I would say similarly with SoFi as well. So it makes sense. What PayPal is what now in your portfolio? 3?
It should be number 3. I need to do an update here probably near the end of the week. Now the air test system's reported, so it shook up some things. But yeah.
Yeah, everybody, please don't donate to me. Please donate to Roy so he can actually afford some nice internet, and we can actually benefit.
Let me exit and come back, and just maybe that'll fix it. So I'll be right back.
Okay, sounds good. I also have to message Matt Money because so he was gonna join, but then I forgot to send him the link. And so I literally just sent him the link at 6 p.m. when we went live. And it's not good. It's not going to help him saying I never invited him on. Oh, look, Tanner's here. Tanner, we were just giving you crap right before you joined. Somebody said, why does Tanner release a video right when you guys start streaming? And I said, because he hates us. That's why. Oh, there he is. That's better.
It
Look at
is.
you.
Good.
Yeah, man. You're almost 720p.
Yay.
You're not
That's
streaming your fax machine.
yeah, I don't know. We got to get this fixed. So, a lot of people too like mentioned comments in the background and lighting and like, I just need to get my internet fixed. Like,
No, I think it's good now. It looks great.
good.
Okay, so we covered PayPal. You're not buying anymore. You are bullish. You think that they're going to announce some nice guidance improvements on earnings and what they're releasing with their new product initiatives are going to pay dividends down the line. PayPal, of course, is not going to pay dividends down the line, even though we want them to.
Oh, they will. They will. Give it a year and a half, maybe 2 years.
A year and a half, really? I mean, they've been
Yeah.
a company for a long time. They haven't gone to dividend phase yet. So that's interesting.
There's been two different comments on Fireside Chats, one by the CFO and one by the CEO himself, that basically said that they're looking for other ways to return shareholder value beyond buybacks in the not near term, but near future. And so given the timeline of the current buybacks, the current authorization as well, I mean, it could be a year and a half. It could be like somewhere between a year and a half and 3 years. I think a dividend is very likely. They're going to want to issue that from a position of strength, not weakness. And so I know Steve disagrees and he thinks they should announce a big dividend thing. But the reality is, like, you wait until the stock price rises. Right here, buybacks make a lot more sense.
Yeah, I don't disagree at all. Okay, next topic, because M. Peters is done with PayPal.
Okay,
you want AMD already. Sold PayPal to go full send BMNR. I don't hate that. I don't hate it at all. It's a degen move, but you're talking to a degen here, so
yeah. Do you want to do AMD next then, or Tesla, or your call, man?
I don't have the list in front of me. Did you like how I promoted the show today?
I did. That was
DMs. Maybe let's talk a little bit about Air Test Systems before we go into the big stuff. So Air Test Systems reported earnings yesterday, and they fell like 25% on the back of earnings. And Roy, maybe Paul will get to SoFi, I promise. Maybe talk to us a little bit about Air Test Systems. Why did they fall so much? What's going on? And what are you doing with your position here, sir?
Yeah, so this is a classic case of a stock being priced to perfection. And so if you look at like actual analyst targets, they've met or exceeded those. It's a micro cap. It's a tiny company that's been around a long time. Won't go into what they do and everything. Don't want to do the deep dive like I did yesterday. But in essence, they were priced kind of like a SaaS that was just about to hit near-term revenue and absolutely ramp. And the reality is they have a very long sell cycle because they actually sell these burn and test units to companies that largely processor companies. AI is specifically a new venture that they're going into that they've actually sold multiple products on. Hard drives, RAM, that sort of thing. And so they'll sell these units. And of course, they do have some recurring revenue as well from a couple of things. Mostly, you can kind of think of it as like selling ink cartridges after you sell the printer. Not exactly the same, but wafer packs and die packs. So because of the nature of that sell cycle, it seemed like the market underappreciated that, okay, there is when a customer comes in and they actually pay you to become a qualified customer that you test and they make sure that everything is up to the specifications that they want. And then there's a contract that's announced. That's like a 2-quarter sell cycle. It can be a little bit faster in some cases, a little bit slower. Depends on a lot of different factors. International, more on the slower side. And so really the big revenue ramp is going to be in the second half of their fiscal year, which is in April, May, June, that quarter, because they do their fiscal years very differently. This is actually Q1 that they just reported. So that's coming fairly soon for them, but it's still a little ways away. We're seeing a lot of early indicators, including a lot of news that dropped on real sales that they had in August. But there's also a backlog that's building, and tariffs, since they're a U.S. company, tariffs do impact because there's been retaliatory tariffs, some of their customer base. So it slowed some orders that are going to come through no matter what. But there's a couple of ways that they're clearly differentiated as a company that they continue to be They have the capacity. They have a really novel cell strategy in that they can both reach package parts and wafer level burn-in. So whoever you are, they can test it for the most part. There's always going to be a few exceptions out there. And as CPUs continue to ramp and processors become more and more complex, including a lot of movable components, weird heatsink stuff, it's DRAM, but I always miss it. It's an acronym that's HBD, HDB. I'm going to have to memorize that one, guys. But these are expensive components that need to be tested, that need burn-in. They are, but they're usually done in a pretty inefficient way, which was just good enough at the time. But as higher and higher levels of precision are needed, you need to shift to something away from like what Teradyne does usually over to something that's more specialized. Air is not the only one that does this, but some of what they do, they're the only ones that do that. For instance, testing at the entire sheet level, wafer level for gallium nitride. So it's a really interesting play, a proxy play to the AI push. And yeah, they were just priced beyond perfection. This is at least a couple year play for me. I think it's going to be long term, but I'm in it for at least 2 years.
So where does it sit in the rankings of your other positions? I think it's the smallest one you hold. And are you buying more on the back of this?
Tesla is actually the smallest. It's tiny. Air Test Systems was at like 7 or 7.5 a couple of weeks ago. Since it's fallen and a lot of other stuff has risen, it's probably more like 5%. If we go below 22, I'll add a little bit. I think we were right around there earlier today, but on Tuesdays, I can't check anything at all in the morning. And then if it goes below 20, I will look to add it up to about 10% iPortfolio. Wow. Which is, I know, crazy for a microcap, but I mean, like, this is not an ordinary microcap. Like, they're right around profitability. You can see they've been profitable in the past. They've been around since basically as long as I've been alive. So it's very different. I really like the CEO. I like the level of communication. It's not a play for everybody. It's very volatile, but yeah, I see a big opportunity there.
Cool. Okay, we have. I think we've tortured the audience long enough with PayPal and Air Test Systems. So we want to give them some candy with the AMD chats. Roy, what do you think about this?
AMD or SoFi, your call.
What was the SoFi news this week?
This right here, and let me see if I can actually share it. Actually, Chris, let me pull up his post because it was just like, that Chris is brilliant. If you guys are in SoFi at all and you don't follow data-driven investing, you need to reevaluate your life and repent and follow him.
Glowing endorsement.
But okay, so the news was that Donald Trump, the Trump administration is weighing selling the $1.6 trillion student loan package. And some people that were SoFi shareholders like, oh, cool, SoFi can buy that. No, we cannot. 1.6 trillion there has to be probably maybe hundreds of lenders that get a piece of this. There also has to be a lot of guarantees of like, okay, if we do this, are they considered privatized? Are they not? There has to be a lot of regulation, legislation. There's going to be a lot of debate back and forth. There's going to be some people that hate this, but you'll also want companies like SoFi will be one of them, that want assurances that, hey, if we do this, that the next administration that comes in isn't going to say, okay, guess what? We've forgiven all those. Because that would be incredibly detrimental. But what's really interesting, so Chris hit the nail on the head. They're not going to buy many loans. They can do servicing rights, and he actually found this really cool callback to actually when JP Morgan and Chase acquired their First Republic, that they actually did this for JP Morgan, which was interesting. And so it's basically a very small chunk of revenue. Think of it like the debit card interchange revenue, like very tiny, probably even less of a cut than that. But, when you're doing that at this kind of scale, that's very accretive, extremely accretive as well. And SoFi, of course, does dominate like 60. They have 60% of the private loan lending market, and they're one of the biggest lenders that are out there. A lot of them are out of business. And then right here, Chris hit the nail on the head too. Long-term benefits, privatization of student loans. Now, what's even more interesting is if they take this. This is a $1.6 trillion thing. They can then buy Greenland, which is $1.1 trillion, and bank the profits. So there you go.
Dude, can you imagine if they buy Greenland and rename it to SoFi? The kind of advertising that they would get would be insane. And probably, and look, man, this is my plea to Anthony Noto. If you could buy Greenland for what was it, Roy? What's the amount?
Well, the Alphaville LLC had 1.1 trillion, which I think is probably more relevant than a lot of the other, because you have to overpay. Like Denmark doesn't want to sell it, and I'm mostly joking on this, but yeah, 1.1 trillion.
That's wild.
So what they do is we buy Greenland, and then we will tokenize the mineral rights in Greenland and sell that, and also give naming rights of Greenland over the next 10 years for whatever company. And so, it can be Google Land or something like that. And but you have to pay a premium for that. So lots of ways the United States can make money off of this. So but we're in degenerate mode. SEC is just like, hey, go for it, guys, have fun.
Today I learned that Greenland is 1/4 of the value of NVIDIA. It's yeah. I mean, I saw the student loan thing for SoFi. I haven't read that deeply into it. And of course, we're going to talk about it more in depth on Friday. I think it's interesting news. I'm not getting my hopes up. Like, there's people who I'm seeing on X, like any piece of small piece of news, any sliver that comes out, they're like, oh my God, like extrapolating to the very most extreme example of how this could be bullish. And I'm like, sometimes it just feels like you're bending over backwards to find different ways that this is bullish for your company that you're advocating for. And at the end of the day, these guys have earnings in 3 weeks. And I think that this is going to be very successful earnings with what they report. Management confidence is quite high, which we can see from Anthony Noto retweeted the Robinhood outage. I found that hilarious. Did you see this?
Yes. Yeah. That's I love it because Anthony Noto is a competitor. He's a sports guy as well, big enough FL guy, college ball guy. This sort of stuff is like bulletin board material, which motivates you, even if money and everything else doesn't. Those rivalries are so good as long as they don't become so damaging that you're willing to basically lose everything to hurt your opponent. That's not where they're at. It's just very good for SoFi. But that's not the only thing that he actually retweeted. Did you see what he retweeted today?
No.
I actually thought this was really bullish.
All right, let's see.
It's right here. It's Jim Cramer basically going on and on how great SoFi is, which I never really love when he talks favorably about my stocks. But SoFi Investor Relations had it, and then Noto reposted it. The Robinhood one, I don't know necessarily if this is like the rivalry thing or confidence, but this especially right here. This is a very confident CEO. And guess what, guys? He knows the earnings results already.
Yeah, exactly. So I think yes, the student loans thing might turn out to be bullish. We just need more information. It's super early days right now. I mean, you get dozens of articles per day around what Trump is thinking about, oh, he's considering this. Trump is considering taking whatever happened to the Greenland thing, whatever happened to Canada, whatever happened to all of these things that he was considering. And so it's like, first of all, I don't put a lot of weight in what he's considering. I put a lot of weight in what he's done and signed. Yeah. So, and there's a mountains, worth of a chasm there. And then even if it were to materialize, you don't know necessarily how that might look in the context of SoFi. And even if it looks good in the context of SoFi, you don't necessarily know to quantify just how good in the context of all of their other business lines and what we can expect feasibly from that, right? And so I just think that it's super early days, way too early to, forecast anything out or even say that this is bullish or neutral or bearish for SoFi. But we don't really need to, bend that hard. It is like pouring outside. Holy. We don't even need to struggle that much to just try to find bullish things for SoFi, because it's like, just look at the CEO's X page and the stuff that he's posting and the stuff that he's retweeting and the stuff that, he's saying in reply to people. There was like a bearish note that came out and he retweeted DDI where he was like, hey, everybody's welcome to their opinions. And I haven't really seen him talk about that before. So, I mean, I think Tanner said this in one of his streams. He's like, dude, like you don't get a CEO saying that and then coming out and reporting bad numbers. Like they're just he's telegraphing that he's confident, and I want to see that from a CEO because this CEO was one that rode with SoFi entire years where the stock was beat down, and so I think that the confidence dominoes and compounds onto each other, and we're just going to see it in 3 weeks what happens.
Yeah, I'm honestly, because of that interaction, I agree. Like you can see the confidence there. I'm going to be raising my estimates for the quarter when we do those predictions for the earnings, just on that basis, which it sounds dumb on the surface. I don't think so. Like time and time again, so there's individuals that hide their emotion well and they can, but Noto, I don't know. It's pretty clear he's confident. So I think there's a reason for it, honestly. Very confident.
Yeah, I just remembered I have to do predictions videos. I got to find time. So, but yeah, earnings is coming out on the 28th pre-market. It's like Tuesday, I believe. We're going to be covering it on whatever channel you're watching this right now. We're going to be covering it, and we've covered all of the previous SoFi earnings for the last 2 years, like consistently. Even though Roy sometimes leaves us to go to PayPal, but it's something that should be fun, especially considering that since the last earnings, this thing has basically doubled, So it's going to be good in the context of what's happening with Galileo. Hopefully we get some color there. What's happening with the loan platform business, and then what's happening with the core lending businesses. What's happening with the brokerage business and the invest business, and especially crypto. So there's a lot of irons in the fire right now, and I think we're going to get much more clarity around what management is looking for, because we always get nuggets of information on earnings calls around management's what they're tracking towards.
Yeah, it's this is going to be a really interesting quarter for them, for sure. Like if they maintain, like they had a weaker comp, which is part of the reasons why that year-over-year growth was phenomenal. They would have been amazing earnings no matter what, though. But if they maintain that acceleration, that they continue to growing, like I don't know if they're doing 35% year-over-year revenue growth, but if they are or higher, I think the market will be like, okay, this actually deserves maybe more of a premium than we've given it. Now, of course, they are at and above that year-end target for most of us, what we've given them. So, if we are range bound until the end of the year, no big deal. But the market is perceiving SoFi in a very different light than it did 6 months ago, which is great.
Yeah. So we're leaving questions, guys, to the end. But there's one question I want Roy to answer right now. Are you going to be watching SoFi earnings with us, or are you going to be doing PayPal again?
I haven't decided yet. So last time I think it was very important that I was there for PayPal, and I was actually very glad that I was, even because I knew SoFi was going to be like just ridiculous. It's like, you guys don't need me. You got these guys anyway. And I knew PayPal might be a little bit challenging. This one, I feel like that there may be equal importance, and I'm actually leaning towards being there with the SoFi guys. If I had to decide right now, I'd say SoFi, but there's time between now and then, so we'll see.
Yeah. If you're not going to project 40% growth this quarter, don't even bother making a video, Roy.
Can you guess what my price prediction will be?
$11.
That's right.
Okay, cool. So that's SoFi. We talked about it. You guys got our take. Join us on Friday for the FinTech Friday, where we talk about more FinTech on Friday, including SoFi and Robinhood and others. SoFi to $40 within 60 days. I would not be opposed to this. I actually looked at the option chain for SoFi.
Yeah.
And October, I looked yesterday when the thing ran. October 31st, $43, which was when where the option chain ended for me, was 20 cents. And I was just like, why? And so I swore off doing covered calls for SoFi. I might get back into the game if you guys pull me back in. I took a loss after having some covered calls go underwater, mitigated that, thankfully, with cash secured puts at the same strike. Thank you, TJ, for that strategy, as well as the capital raise that SoFi did. If you will remember, right after earnings, the stock fell down, and I was like, okay, this is my opportunity, and I bought all those covered calls back. And so I didn't lose my shirt on that trade. But ever since then, I was like, look, I'm going to be too emotional to treat this particular ticker as a business. And I don't want to, part with my shares. Everything else, BMNR, UNH, Nebius to some degree, I was okay with letting go at certain prices. So if I know. And so I said to myself, no more covered calls for this guy. It's over. But now I looked at $43 for October 31st. It's over earnings. That's why it's a little bit juiced up. But dude, $43, it's at 27, 28 right now.
Yeah.
What?
Yeah. If you're, this is not financial advice, but it's just for Tevis. So everybody else close their ears. But if you're like, hey, you know what? If it gets to 43, I should probably trim some anyway. That's the amount that you should look at selling as covered calls.
That's good advice. Going to 43, guys.
So that's why I want him to do it, guys.
Yeah. So it's actually funny, man, because I remember when we were writing covered calls on SoFi at $14, to get 20 cents of premium, you would pretty much have to write covered calls at the money. And that was it. Whereas now it's you can get 20 cents of premium when I'm $12 out of the money, something crazy like this. It's just ridiculous. Anyways, I will let you guys know if I end up doing it. Right now I'm leaning no, but if I do, I'll let you know. All right, let's move on to AMD news, Roy.
All right.
So let me take a look at our DMs here.
Yeah, I can pull something up too.
Yeah, now that you have good internet.
So in essence, go ahead. You pitch it.
AMD rose more than 20%. I mean, I think it rose even higher than that, quite frankly. After announcing a deal with OpenAI. Let's see here. Is this?
No, that's not it. This is a parody thing.
Let me just cover the news. So OpenAI is going to deploy 6 gigawatts of AMD's Instinct AI GPUs over multiple years across multiple generations of hardware, starting with an initial 1 gigawatt rollout of chips in the second half of 2026. As part of this deal, AMD has issued OpenAI warrants for up to 160 million shares of AMD common stock, which could see OpenAI owning as much as 10% of AMD. So another week, another OpenAI deal. They did it with NVIDIA, they did it with Oracle, and now AMD is in the mix. I mean, Roy, what do you think? First thoughts?
It's weird. So for context, OpenAI and NVIDIA had a deal not long ago where NVIDIA is like, okay, we'll have a massive order with you guys. You need a lot of our units. And in return, NVIDIA is like, we get a certain percent of your company. And so they got OpenAI equity along with it. Now, part of the reason is OpenAI is an unprofitable startup. They're ramping rapidly, but they are burning cash probably through 2029 or estimates that they release. So it's they're being realistic, which I appreciate. AMD, it's a little different. They're like, hey, we would like to actually have your chips. And pull this up right here. This is from Mark Levine. Have you seen this, Tevis?
I'll just not.
You have not? Okay, this is great. I shared this yesterday with Tech Bros Weekly, but how do those negotiations go? Schematically, OpenAI is like, hey,
what is this?
This is from Mark Levine. Mark Levine's basically, he basically, it's just so it's really weird when you have a deal that's structured of buy our chips, and in return, we will give you some of our equity as a business. That's weird. And when that happens too many times, it becomes pretty sketchy. Now, I don't think AMD is sketchy at all. I think that there's some reason for it. But in essence, they're like, hey, this OpenAI comes and they're like, we would like 6 gigawatts worth of your chips. Terrific. That'll be $78 billion. How would you like to pay? Well, we were thinking that we would announce the deal and that would add $78 billion to the value of your company, which should cover it. No, I'm pretty sure you have to pay for the chips. OpenAI is like, why? AMD, I don't know. It just seems wrong not to. OpenAI, okay, why don't we pay you cash for the value of the chips and you give us back stock? And when we announce the deal, the stock will go up and we'll get 78 billion back. AMD, yeah, I guess that works. So I feel like we should get some of the value. Okay, you can keep half. You give us a stock worth like 35 billion and you keep it the rest. It's weird. And it's the one takeaway is it's very bullish for AMD. Don't take what I'm about to say as anything but that. Like it's great for AMD. It's accretive for AMD, but it's showing that AMD is positioned much weaker when it comes to these kinds of negotiations than NVIDIA. Because just think about it. NVIDIA is like, you want our chips? Great. Give us a bunch of money. And OpenAI is like, well, we don't have that kind of money. Okay, then we want a bunch of equity on your company. AMD's like, okay, you want our chips? Awesome. Give us money. Well, no, we want some of your company in exchange for this purchase. So it's completely flipped as far as the negotiation leverage. And ironically, Tevis, since NVIDIA, as long as these thresholds are reached for both AMD and NVIDIA, NVIDIA will own indirectly a chunk of AMD through OpenAI, which is hilarious.
So when I brought up this news a couple weeks ago on the FinTech Friday, I can't remember if it was an after hours or just a normal episode. I remember distinctly I was saying, oh, this is kind of weird, guys. Isn't it weird? And then you and Tanner were both like, well, actually, Tevis, that's what's called a market. And a market has buyers and sellers. And so like, what's changed between that and now you calling this weird?
When you have to pay somebody to buy your product, that's weird. That's
Right.
what's happening here with AMD.
Right. It's all like everybody's tying their fortunes to everybody else. And it just makes me really worried because if one of these guys goes down, the dominoes are going to start falling and it's just going to make the pullback so much worse. And like, I think we're at that part of the cycle where like I, number one, sound like a freaking boomer when I say that. And everybody's like, yeah, you're an idiot, Tevis. Don't even dare say anything that's not bullish about these. But like, let me throw this up. I don't know if you saw this or not. I shared this with us like a couple hours ago. OpenAI is at the center of all of this. So custom chip design with Broadcom, data center deal with Google, cloud integration with Amazon, multiple governments, companies, deal with CoreWeave, deal with NVIDIA, Oracle, SoftBank, Microsoft. And it's like everybody is connected to everybody. It's just crazy. I don't know, man. It's just like OpenAI. If OpenAI partners with anybody, that company pumps. And it almost like, I don't know. It's just, I think Elon even commented on this where it was like, oh, it's kind of strange that a nonprofit company is doing all of these deals. And he's like, yeah, isn't that strange? So I don't know. I don't know what to think anymore.
Yeah, honestly, like as interconnected as OpenAI is with other companies, if at some point they stumble and they fail, I'm not predicting that. I'm not saying that's likely to happen. But if they do, yeah, it doesn't mean AI is not real, but a lot of companies are going to deflate. Pretty much every single one of those on the list.
Yeah, like
air test systems too. I mean, like it just Micron, just left and right, companies that you're not even thought of.
Yeah, I don't know. Like, oh, a scandal drops, OpenAI caught in some fraud, or they're doing something sketchy with customer data of like, how do you obtain this customer data? Now you're in court, and guess what? You can't use this data to train your models or whatever. It's like, well, OpenAI is a private company, but guess what? Brings down all the big AI companies as well, because now they all have deals. Like they all have tied their fortune with OpenAI. Yeah. And you were going to say, well, okay, like that's going to happen anyways, because the market just, like something happens on the Oracle news today and like Nebius is falling on a sympathy, like pullback. And like, sure, but this is actually a little bit different.
Yeah. Well, let's maybe pivot into that. Do you want to introduce the Oracle stuff?
Yeah, sure. I kind of want to read some of these comments too, because I think we're getting some really great comments. So let me read some of these comments, and then I want to pivot to the Oracle news, because that was also interesting. I posted about that earlier today. Okay. AMD just has inferior chips and gets free chips. I would sell AMD on this news and buy Nebius. I think this deal is amazing for AMD and the entire market because it shows how high the demand is, but it's also scary because when they do inevitably overbuild the bubble, it will be much larger. Shirley says it's because for them to use the chips they have to put in development to be able to use AMD chips, that software and firmware doesn't exist. NVIDIA has a whole ecosystem, but AMD does not have that. So again, I think doubling on this inferior chips concept. So NVIDIA investors own, and even though most of them have been crafting on number two, so NVIDIA is a part owner, I guess, indirectly in their competitor. It was weird before and it's weird now, but stocks go up, so who cares until stocks go down. Yeah, this is like the market sentiment in a nutshell right now, which makes me really nervous and kind of wanting to hedge, to be honest with you guys. Not unusual for new chip development, but AMD shouldn't have had that big of a run up. They're currently priced for perfection. I think a lot of people agree that AMD chips are inferior to NVIDIA chips. So clearly, anyways, market structure really fragile. The more intertwined they get, the longer this can go. So, yeah.
Well, the other thing that's happening too is the U.S. government keeps getting equity in a bunch of companies. I think it's now 4 or 5 now. Yeah,
that's the other one. It's like a metals company or something like this.
And I just don't like that at all. Like, I don't mind if they created like a strategic, reserve. I can't think of the name for that sort of portfolio, but this is a little bit more direct, and I do not love it at all. But in that environment, and also in this environment as well, where we're having these AMD deals and Oracle deals and NVIDIA deals, even the way that they're structured, although the AMD ones are really the only one that gives me a lot of pause. It's hard to see the market really fundamentally like crack anytime soon, barring some sort of big fraud break or something like that, where there's been a lot of fakery, which I don't think is the case. But I mean, it's a private equity, so you don't not private equity, private company, so they're a little bit less transparent.
Yeah,
if Chamath was at the helm of OpenAI, I'd be really worried.
Yeah, and look, let me say a couple of things. I think this is kind of interesting. On October 2nd, users on X began noting unusual options activity in AMD. Over $6 million worth of long-dated calls and flows into AMD stock were strong. One user explicitly said here, I bet you AMD just signed a multi-billion dollar to supply GPUs to OpenAI, AWS, or Nebius, especially Nebius. Not only these prints, but the AMD flow has been insane the last 2 days. And you can just see this unusual call activity. And 4 days later, guess what happens? AMD announces a deal with OpenAI, literally what people on X were saying. So it's kind of crazy. I mean, it's worth it to follow some of this unusual trading activity because people always know in deals like this. I also found it kind of interesting that OpenAI is now worth more than Exxon. I saw Sam posting this 3.7 billion, 500 billion valuation. And this 500 billion valuation, Roy, is pre AMD deal. So let's see what happens post AMD deal. Maybe it's going to be 750. Who knows? But 3.7 billion is what they're making right now. And if Tanner was here, he'd be ripping his hair out because he'd be like, "Oh, it's all about future whatever." Now, one thing I will say about OpenAI, and maybe we want to talk about this next, and then jump into the Oracle news. Because I found this to be super cool. Shall I play this?
Nah.
Okay. Okay. Well, OpenAI now, ChatGPT now has integration with apps. So they have an integration with Booking.com where you can just say, "Hey, ask Booking to find me blah blah blah," and then it'll like tap in. It's basically MCP. It'll tap into Booking app and find it. Canva, Coursera, Expedia, find me a flight to Chicago, and it'll find you that. Figma, this is really cool. You can just do like a little drawing as a like on a napkin, literally on I have a flow chart on Figma, Spotify, Zillow, and there's going to be so many more of these. Um, I mean, it's going to be really interesting, right? Because having applications now directly integrate with OpenAI, number one, is going to crush a whole bunch of third-party, startups that were built on top of the LLM ecosystem. First and foremost, if LLMs do that themselves, and then number two, I think like these kinds of things is, and I wish Tanner, was here because I'm talking his book right now. Like these types of things are that next wave of applications for AI. It's not just, oh, here's a chat window and it can answer anything you want it to answer. It's actually putting it into action where it can take actions on your behalf. This is what Anthony Noto wants to do with SoFi, where like Cash Coach and others can, their SoFi's own AI can basically make decisions for your financial life based on your historical actions. OpenAI is now integrating with this, like basically building like their own integrated app store where they can tap into applications. And I think that has real world applications for what that value is going to be. Because I mean, we've talked about this in the past. I've said that the big limitation right now of chatbot style LLMs is that it's a closed sandbox. You don't understand the context around me. You don't understand, how I would take certain actions. This is why I was really bullish on Apple's solution before Apple announced it, because Apple already has my entire sort of life on my phone. So Roy, what's your take on all this? What's your take on the app ecosystem now for ChatGPT?
Yeah, I mean, it makes AI more real for a lot of people that are just using the LLM and that's it. Having apps you already know and understand integrated. Microsoft tried to do this with Copilot, but Microsoft really was terrible with their implementation of it, at least initially. I heard some people say that it actually got better. I tried it a number of times, now not recently, but I was so underwhelmed. It did so little with so much. I'm like, I'll just do it myself. This is dumb. It's kind of like having an employee that's just terrible at their job, and you give them a project, and then afterwards you're like, this is terrible. I'm gonna have to redo it all myself. So just cut out the middleman, fire them, and go. But I think that this is a good implementation, like especially with something like Figma. It's also very bullish for the next wave of stuff. So one of those, talking my book again, but I'll say Shopify and Stripe and also PayPal, the agentic commerce stuff that's happening, having apps natively integrated with OpenAI, and OpenAI will not be into it. It'll be a Gemini, it'll be Claude and others as well. Claude actually has some of this too. You'll need a way to pay that's a trusted way to pay. That's agentic commerce, one of several applications. Perplexity, though, already does some of this. I've actually been playing with their comment browser. It's on my laptop, not on my desktop because I use Linux here. It's really good. And just like having that AI right there on the sidebar that you can click that can actually interact and do tasks on your web pages. It's awesome. One of those things that it suggested when I opened up X for the first time today, I didn't have enough time, so I didn't do it. But it's like, block the bots for me. I'm like, ooh, it can do that. I can just say, hey, block the bots on here, and it does all that. And I don't have to worry. Oh man, that's awesome. So, but yeah, those things are really important as AI continues to build out. You don't just want this used in large major corporations. You also want it to be used in the consumer level, which, like Shirley had mentioned, you basically can. I'd phrase it as you're replacing a lot of human toil. Those toilsome, burdensome tasks that you have no desire to do, like block stupid bots on Twitter because Elon Musk doesn't care if they're on there or not. That's awesome. Versus like, oh, I like drawing and I like drawing by hand. Well, then keep doing that. Like, there's no reason to use AI for something like that. So it gives you time back conceivably, or lets you be more productive. And that's just a really good multiplier for humanity, or it can be.
Yeah, I don't disagree. And like, it's crazy to me. Like, I don't know, man, I'm torn on this whole thing, right? Because on one hand, I understand that being a little bit well read on the history or the psychology around previous times where we had this massive run up, and how did people not see it in the moment? It's very easy to not see it in the moment, because for every single piece of bearish news, you also have 5 pieces of bullish news, right? And everybody is euphoric. And so, on one hand, I want to put a hedge on and call a top and be really, really skeptical and careful. On the other hand, if OpenAI, this company that's a couple of years old, can just randomly come out one day and completely crush a whole bunch of YC companies in the making, in like just like that, that is really bullish. Like, it's just crazy to think about the potential of a lot of these things, because every single month there's something new that's coming out. Every single month there's something groundbreaking. It feels like every single month there's this big moment around a breakthrough in AI. And back when image generation came out, everybody was doing the cartoon images, and then video generation came out, and Grok did Imagine and VO3, and I can make a full action trailer of our podcast if I wanted to. And it's like, now I can integrate with apps, and a month from now, integrating with apps is going to be totally commonplace and normal. And then, 3 months from now, something else is going to come out that's going to blow your mind. And so I just think that, like, oh yeah, and you had the companion thing that was in the zeitgeist for a month or so, because now you have like AI that'll flirt with you 18 hours a day. And it's just like the pace at which this is growing, and the applications that expand this total addressable market, I think we're still just scratching the surface, and like we're living in it. And that's the crazy part. Like, we're seeing in real time these historic changes in the way that our society interacts with each other and in what we conceptualize to be the norm. This paradigm shift is happening beneath our feet, and we're just expected to, treat it as something normal. And it's happening so quickly that we're almost desensitized to the magnitude of each individual paradigm shift that we're seeing in the context of AI. And I think that is a really profound point to speak to the application layer of AI, and just the fact that this thing can go much, much higher. And it is not, in fact, a bubble. It's actually just the beginning of a complete reimagining of what the economy is and what the world could be. And so I don't necessarily know what's going to come out next, but I think, like, when you're thinking about robots and Optimus, and I want to show the figure video at some point, like, these are the things that hold me back from being a skeptic, from hold me back from putting on a hedge, right? And I don't know, like, I'm so torn internally. I'm so conflicted internally, because I'm like, well, back in 1999, I'm sure there were equal reasons that attributed the internet to hold them back from calling a top. And they all got screwed. They all got burned because they were investing in pets.com at $100 billion or whatever. Right? This time around, it's AI, but it's the same thing. It's the same mental, like, mouse wheel.
So here's where I see it, like, as far as measure of safety, and then I'll talk about what comes next with what's on my screen, but don't put that up yet, please. You can see, like, the market leaders, for the most part, they're not trading cheaply, but if you look at their price to earnings, the reason why the stocks are going up is not because the multiple is expanding at this point. If you look at it over the last 2 years, it's actually, for a lot of these, including NVIDIA, contracted. And yet the stock price goes up. Why? Because earnings are absolutely real and they're killing it. Now, there is some of the whole circle stuff that we mentioned that's happening. That's the nature of an economy and a business. But it's not overly concerning between that and between the massive revenues that are ramping, and between it's not just revenues, but it's the sheer profitability of most of the leaders that are in this space, like NVIDIA, like even Apple, which is not really an AI right here, deeply profitable. NVIDIA, deeply profitable. Google, deeply profitable. Meta, grossly, deeply profitable. And so, like, the concern, I think, is, like, there's people that are calling this 1999. At best, this is 1997, but probably not even there. It's probably more like 1995. So, like, so early in the internet where people are just learning about it for the first time, maybe 96. There's plenty of time, I think, left. There will be ups and downs. There will be pullbacks. What I'm thinking is going to be the next wave. And so we're seeing some of this right now. This is a sub-example. If you can throw this up, Tevis. This was an interesting headline. Yes, talking my book, but I track these companies. That's why. One MedNet, which I'd never heard of before. Had you heard of this before, Tevis? Yeah, it's like a tiny microcap company that's been around since 2015. Selects Palantir to advance healthcare, AI, and data analytics. And then their stock pumped. You can see in the past 5 days, it's up 142%. Why? Because they partnered with Palantir. Like that's it. You've seen this effect with NVIDIA as well. But the reason why is the market is seen time and time again when NVIDIA partners with someone, when Google partners with someone, when Palantir partners with someone, that the products are real, they're tangible, they bring real ROI. And so a tiny company that has 23 employees, maybe a little bit more now because it's 2025, is capable of having a market cap of 120 million. The next wave, and I think Alex Karp alluded to this, but there were some others as well that said that there's going to be a wave at some point of AI unicorns. I think maybe next year is when we really start to see these of just tiny man teams that have a valuation of $1 billion or so. Now, one of the challenges to that is private equity outside of the massive players like OpenAI and SpaceX that are there is drying up. It's actually in a bear market. But that also means that as long as these companies are successful, that they can ramp revenue, that they have real products, that they'll have a vested interest of going public. And I think we'll see a big wave of those as long as the bull market remains intact over this next year. But these are real companies that are generating real revenue and real results, not just names and web pages without a real business plan. So I think that we're very, very early, a lot of room to run, and I'm positioned that way, and I'll continue to be so.
It's interesting because, like, I think about all the things that I pay for that I don't think about, that I don't even consider cutting. And like cloud storage. How many people watching this pay for cloud storage? Why? Well, like my phone is 200 gigabytes, and like I had to buy one for 200 gigabytes because the one that I had that was 128, I had to pay cloud storage. Or stuff like, what is a subscription that I'm using that I wouldn't even consider cutting? And I'm not talking about streaming services. Like all of these things that are seemingly necessities in my life. Yeah, look, Duck, I pay for a terabyte of cloud storage on my phone. Like if somebody said that 20 years ago, like that would be a crazy, wild, out of pocket statement, right? And today it's like, okay, yeah, like that makes sense. A lot of us do. And so I just think that right now, does it hurt me that I'm paying for Grok or ChatGPT or whatever? Like I think like a lot of people now have like a ChatGPT subscription that's very normal. They don't see it as an extra thing. These are the same people that are complaining about, oh, well, I don't know if I should pay $15 for Netflix, and all of these streaming services are just like cable, and I don't want to pay for 5 of them. I want to pay for 1 of them. And so it's just like, I think it's going to normalize a lot of the recurring costs that people pay, depending on what value is provided by these AI tools in their lives. And the more you can move into this, yeah.
I was going to say, you use an Apple product, right? Apple phone?
I do.
Yeah. I don't know if Apple has this or not, but Samsung didn't, or at least I had an older phone. And I got a Pixel, last year. One of the coolest, and it's just a little AI, not a huge deal. I've got a bunch of photos and videos, and sometimes I'm like, oh man, what is my license plate? I know I've taken a picture of it. And so you literally have a search function in your photos, and you type license plate, and it finds all the photos and aggregates them according to what's more probable. And I love that because sometimes I want to show pictures of my garden or one of my kids, and it groups these automatically for me. I'm like, oh, this is so good. And it's like a little thing that you don't even think of, but once you have that, like imagine having a system that I don't have access to that anymore. Like, dude, I'm not going back.
Exactly. And it's like, dude, like if I'm paying $30 a month off a chat window and it gives me good results, then it's like, if the cost is still $30 a month or $35 a month, and now all of a sudden it integrates with my OS, and I can say, hey, order my regular, bi-weekly Instacart order, book me tickets. These are the dates. This is the maximum price I want to pay. whatever, like all of these things in between. I'm trying to think of all the use cases for what they integrated with. So like it can literally be a virtual assistant for you for such a low cost, and you can unlock so much utility as a result of it, and you won't feel it because the value will far outstrip the cost you pay on a monthly basis.
Exactly. Yeah. If the value is real for you, it's same with businesses. Like that's one of the complaints that a lot of people have with some of the AI products that are out there, and even the chips. It's like, oh, they're really expensive. Yeah, but if the ROI is there, you don't care about that. You care about the ROI. To a certain extent, you do care about the expense, but mostly it's focused on is it worth it? And so consumers, same way. Do you want to talk about Oracle briefly? Probably not long.
Do that. What is this comment? Because I don't know what's happening tomorrow. Do you know what's happening tomorrow?
Not sure what he's referring to.
Okay. Well, let us know what's happening tomorrow. So, okay, Oracle. Let me share my screen. So, Oracle is fell today as a result of some news that came out by the information. This is a publication that's behind a paywall, so it's kind of crazy that it had that effect on the stock. But whatever. This says, quote, in the 3 months that ended in August, Oracle generated around $900 million from rentals of servers powered by NVIDIA chips and recorded a gross profit of $125 million, equal to 14 cents for every $1 of sales. The documents show that's lower than the gross margins of many non-tech retail businesses. As sales from the businesses nearly tripled in the past year, the gross profit margin from those sales ranged between less than 10% and slightly over 20%, averaging around 16%. In some cases, Oracle is losing considerable sums on rentals of small quantities of both newer and older versions of NVIDIA chips. A spokesperson for Oracle didn't have a comment on these figures. So basically saying the margins are shit for Oracle. And yeah, it is a hit piece, and a lot of them have been coming out. And of course, I commented. Oh, sorry, did I drop it? Of course, I commented and I said, look, Nebius is also falling on the back of this news. Down 7% intraday. Profit margins around AI infrastructure in general undermine the business model, the renting essentially. More reading, and then I saw this post, and I'm wondering, Roy, if you saw it or to get your thoughts here. So the hilarious Oracle $100 million loss story has spread out to scare people out of the best stonks as to grab them at a discount. GPU revenues ramp up is always gradual before getting steady once at regime. While depreciation isn't. Depreciation is on a straight line basis, total capex divided by expected useful life. This dynamic is super common in capital-intensive sectors like AI cloud infrastructure, where upfront investments create accounting headwinds before revenues catch up, generating the classic J-stick in profitability. So basically saying this is a nothing burger, it's a buy the dip, because this is baked into the way that these guys make money. It's low margins at first and high expenses, and then eventually that dynamic shifts.
Yeah, I'm guessing that these, and Shirley said it, they all have losses for tax purposes. These are probably paper losses, not like real losses that are there for tax purposes, which you can legally claim. They're not doing anything sketchy. Stock market news, or stock market nerd rather, Brad Freeman said that he saw a segment on Fox Business. I didn't catch it, but they said, according to verified sources, that these comments were all off base. Who knows? But at some point, this will be commoditized. I think we're way too early for that because you're seeing rampant demand the other direction, not so much on this. But yeah, maybe there's some truth to it, like with paper losses. Who knows?
So yeah,
it's not concerning.
I sold more cash secured puts on Nebius today. Pretty okay with that. I don't feel bad about it.
How much What's it trading at now, Nebius?
120.
Yeah, man, I sold at 45.
Ouch. That's crazy. Well, yeah, it was up to 135 a few days ago, and it's at 117 now. It's pulled back a little bit, and yeah, man, I'm like, it's a $30 billion company doing what they're doing. It's so incredibly bullish, and like, yeah, of course. I think Manuel posted today, and Manuel's like the OG on Nebius. He's like, guys, like we ran really hot for a while, and if it was going to fall on this news, it was going to fall on some other news, and like just let it breathe. And I agree with that, and I'm generally, bullish on the growth. There was new interviews that came out with management team from Nebius, and they basically said, "Hey, we have a bunch more big deals upcoming, so stay tuned." And that's obviously really exciting.
Yeah. No, they're going to do well. And Tevis disappeared. All right. Well, I guess, guys, we're going to pivot then to Tesla. Or you're back. Are you good to pivot with Tesla?
Yeah, I'm good to go.
Okay. So did you see?
Yeah.
Did you see the new cheaper Model Y and 3?
No, I was going to throw up their teaser post.
Oh, okay. Go ahead and do that, and then I'll show you some screenshots from Sawyer Merritt's video.
So let me throw up this. So basically, Tesla posted this a few days ago, and
people thought it was eVTOLs. It was hilarious. I don't short, but I almost bought puts on Archer Aviation just based on that, but I didn't.
Yeah. Anyways, it's like just this thing spinning. I don't know why it's not playing right now, but so what you're saying, Roy, that this is the new model?
Yeah. Well, so yeah, Sawyer Merritt has a video that's about 25, 30 minutes. That's out. He details it. Got an early look. They announced the price sticker and everything. So go ahead and throw this up. I'm not sure the whole video, but I'll show you some pictures. So this is the front. It's significantly smaller. This is a Model Y, by the way. They also do have a Model 3 version as well. Look how I hope it's not finished like this, but like look how trash and garbage this looks. Now, I picked deliberately the worst screenshots, not because I'm embarrassed Tesla, but I want to just highlight, areas that I'm like, okay, so they actually covered up they still have glass on the outside, but they covered it up with felt on the inside for some heat and energy savings. But I'm like, it's a terrible look. It just is. This is the back seat. Almost everything is manual. They've removed automated almost everything. No screen in the back here. This whole thing is manual with latches. You move the seats manually. They removed, even in the front, a lot of the options. Of course, no vented seats or anything. A lot of the premium stuff. And the savings is, which that might be a little bit hard to see, this is $40,000 US versus what they're now calling the premium, the one that I have, which is a rear-wheel drive, $45,000, all-wheel drive, $49,000, of course, performance, $57,500. So in my mind, and I'm a little bit, I own 2 Teslas. We own the supposed premium Model Y, which is premium. It feels premium. It's like a luxury vehicle. Moving from that to something like this, it's not worth the $5,000. It's terrible. But if somebody doesn't own a Tesla at all and they get in, they'll probably really like it. And some of the features I really like, that you can actually adjust the seats right on the screen, makes a lot of sense for the direction that Tesla wants to go. I actually like that the center console is up front, that there's a gap kind of like there is with the Cybertruck, where you can have more legroom. You can set something down there like that. There's a few other little things I really like too. The look isn't bad either. But like the question is, like, is it worth inferior almost everything? Range, acceleration, handling, acoustic glass is gone. There's no auto pilot at all. You can pay for full self-driving, but no autopilot. The headlights are worse. The tail lights, just across the board, it's not nearly as good. Is it worth the $5,000? I don't think so. I think a lot of people were expecting a $30,000, maybe more on the Model 3, maybe $35,000 on the Model Y, was what I was thinking might be compelling. This, I don't think, cuts the mustard. I don't think that this is going to be a compelling product at all. And so I'm very doubtful that this does much for Tesla and their bottom line. And at least right now, for the standard, when I looked, well, I'm seeing my screenshot maybe differently. I don't think they had a leasing option on this, but it could be that they use this just because it's cheaper for leasing or robo taxis as well. But again, my issue there too is if somebody gets in and this is their first Tesla experience, they might like it, but they won't. I don't think, I've not been in it, but I don't think that they're going to fall in love with it like they would with that brand new refreshed Model Y, which is, it's a ridiculously good vehicle, just so amazing. Model 3, I've been in the Model 3 Performance, the refresh. Shout out to Davis. Amazing vehicle. When you get in those cars, you're like, oh man, this is money. Versus this, it looks like it feels like something that's slightly better than a cheap Honda, which, reliable, good cars are not bad, but for $40,000, yeah, I'm skeptical.
Yeah.
What do you think, Tevis?
I don't disagree. I think we've seen this before with Tesla where like sometimes the quality of the car is lower or has more errors as a result of their production line. Like I've seen videos like that pop up every now and again. But I think it's to be expected to some degree. Like if you're gonna have a cheap model, and especially like if you want to have like a $25,000 model, like yeah, you're not gonna have a steering wheel, you're not gonna have pedals, you're not gonna have any of this stuff. Like it's gonna be super bare bones, and I don't like it. I don't really endorse it for that. Like I want there to be a premium experience, but really Tesla, they over-index on the software side of things, and a lot of the other stuff is sort of left to the quality of the raw materials is not as good. The experience holistically is not as good, and I don't know. I think for a lot of people, like that matters, and it matters equally. And I think in a world where this is crazy, this like if Tesla does license their full self-driving technology, I think they're going to benefit because they're going to get a lot of money from other automakers that now have the Tesla software for full self-driving. But I think they're also really going to get hurt because then they lose their moat against competitors, because everything else in the experience, like for the same price, I would just buy another, European manufacturer. Like I would buy a BMW or something and have a super like premium, whatever, super premium experience inside.
I hate BMW, but
sure, it doesn't matter. The point is like, actually, so when I was in Europe, man, you have no idea. I don't know how it is in the States, but you have no idea how many BYDs I saw. All these BYDs, all the taxis were BYDs. Like it was just incredible. I thought like I was in Asia or something. Like it was just BYDs everywhere. And I saw a lot more BYDs than I saw Teslas. And so it's kind of interesting, right? Because like, okay, you want a cheap car. Well, okay, BYD is going to compete on price. It's going to compete on the technology, and it's going to also be very competitive on the actual, let's say, customer experience inside the car.
Yeah, I correct me if wrong, but I think that they, BYD is pretty heavily subsidized by China, along with many of their other EV manufacturers. So it's hard for any car to compete on a price per value standpoint, solely based on that. So it's fine that Tesla wants to do a cheaper model, but yeah. I'm curious, like, is that your reference point to like the refresh Model Y? Because that feels really good. Or the Model, like honestly, the Model Y is just a regular SUV. Have you also been in the Model S or the Model, to a lesser extent, X? Because the inside feels very premium in the refresh Model Y. Maybe not on Mercedes level quite, but it's a really nice feel for the price.
I haven't been in any refreshed models. I've been into a 3 and an X.
Okay, fly to Houston. I'll put you up. We'll go out with Matt, have lunch, drive around in my wife's Tesla. We'll have to ask permission.
Matt and I were on the phone. We were on the phone yesterday, maybe like when he joins, because he just messaged me. We can talk about it, but we're like, dude, we need another vacation. We need something soon.
Yeah.
And so we were thinking, we're like,
3 days.
Roy, BM&R Pope, and let's do something fun.
I actually have 3 days plus a weekend, so conceivably, yes. I'll try to do it. Yeah.
Okay. Well, when Matt gets on, we can stay a little bit later and we can chat about it.
Yeah.
If that's something that I'm trying to find, like a long weekend or something where I don't have to disrupt my work for too long. But if I do, then I do. I don't really care.
Yeah.
Okay. Next topic. What are we talking about next, Roy?
I think, we had some other subtopics and everything, but I think maybe we're an hour and 20 minutes in. Let's get to folks' comments and do the Q&A period, if you're good with that.
Let me throw up one more thing. Yeah, Tanner won't go. He won't. Probably not. Didn't y'all go on vacation last week? Yeah, I did actually just fly back last week, but I can't be in Canada for too long, man. I need another vacation soon. All right, and I've been here for a week now, so I need to get the fuck out. Let me throw this up, Roy. I found this interesting. I don't know what you think. Time on social media peaked in 2022, and young people are essentially the early adopters of this trend, now starting a decline in time on social media. I find this really interesting. And the reason why I find it interesting is because so much of modern society is like based on social media, and that's advertising, that's streaming, media consumption. Like there's so many industries that are all based on social media, and yet young people are feeling the need to unplug and have more real world experiences. And I just, first of all, want to ask you, like, do you think this is something that will continue to decline amongst, well, I guess like as younger generations go, so do all generations eventually. Like they are usually the early adopters for new trends. I'm finding that I'm not spending, like, if it wasn't making content, I definitely wouldn't be spending nearly as much time on social media as I do. But it's a little bit different for me. But I'm just curious if you think this trend is going to continue its downward descent and if other generations are going to sort of follow suit.
Yeah, I mean, maybe. I think that there's going to be a craving for something real. Not that social media isn't real, but there's a lot of fake stuff. And as there's a lot of AI slop that's increasing ever since 2023, I'm seeing a lot of it this year, a lot of it. And I think it's only going to get worse. That'll discuss and turn off a lot of people. The other part, I think, is there's not exactly pent-up demand, but because of COVID in some areas, they were locked down for a long time. Social media was like your only way of socializing for a lot of people. And I think that when you basically overdosed, and that's, you can look, that's where it peaked for a lot of these folks. You realize, okay, yeah, it's not that good. It's not that fun. It's better than nothing, but maybe get outside and touch grass. So I've seen with very young folks, like there's a number of, like a large number of middle schoolers and early in high school, Generation Alpha at our church. And they are very unique in a lot of ways. Now they're the Skibbity Ohio and all that weird stuff generation, there's always, but that segment, and I don't think it's just because they're at our church, tend to be actually more conservative, which is interesting. They're more men than young men than young ladies. They tend to be more conservative in their values. They don't think that drinking is cool. They are prone to like do vaping and that sort of thing, and they shouldn't be, but whatever, that's happening, and not great. But they tend to actually be on social media way less. They still play a lot of mobile games and stuff, but yeah, social media doesn't attract them at all the way it did, that previous generation, Generation Z. So that's a very interesting shift that I don't know. I don't know if it's because they're a product of that COVID generation and they were just shut out for a couple of the key development years. And now they're like, no, we're not going that route. But it's an interesting shift in society that I didn't expect. But I really love that. I've talked very critically of Meta and Mark Zuckerberg, even though I think that they're a killer CEO and killer company. I just really don't love what they're doing and how they're doing social media. Ironically, we're here on YouTube. I post on Twitter, and I'm on social media probably more often than I should. So yeah, you can call me a hypocrite, but I think it's a healthy trend. I think given Generation Alpha and the way that they're positioned right now, we'll continue to see that downtrend for a while. It's not going away. It'll just be different. But yeah, it's a net good thing, probably.
Net good thing, but like I wonder what the repercussions are going to be for a lot of these companies because, well, all of a sudden this trend now plateaus and they don't have these like secular tailwinds anymore. And so that's going to be really interesting to see how they adapt, right? And like it's not just Meta or Snapchat or TikTok. It's like advertisers in general. If you're seeing less, like fewer eyeballs, then the ad spend is going to look different. And we saw this uh, for different reasons in past years, particularly with regards to the pandemic, where ad dollars were shifting where they were going. And I think it might be interesting to call out as like a larger macro trend if it does continue.
Yeah, there's some really interesting comments from our audience in there. So go ahead and start throwing them up if you don't mind. Shirley's at 723 is the first one, then Brock, Matthew as well.
Yeah, let me throw these up. So Shirley says the kids are more cautious of being addicted to social media now, which is good. It means that our culture is adapting to technology. More AI means less value in digital interaction versus real life. Brock says, I have 4 20-something kids, and all of them have stopped using social media. Like many, they believe it's toxic. Matthew says, I'm not Gen Alpha. I'm 22. I've never drank alcohol or smoked or anything. I'm pretty sure my generation, Gen Z and Gen Alpha, are record low for drinking rates. Let's see.
Yeah, Eggs and Tacos says the opposite at 726.
I don't know how much of this data is right. I just see the kids glued to super special social apps, just not on Insta and X.
There's some of that, like Snapchat for whatever reason. If they use social media, it's Snapchat, but I'm just not seeing it. Both, in the ones that I'm around at the church, and then also around my boys who are in their early 20s. Also, my daughter who's 12, that we don't allow her. We allow her very limited access, but that's not her choice. But my sons, I mean, they're adults; they can do what they want. They're like, social media, no.
Yeah, well, like I think this is an interesting point, right? Because okay, let's just assume for a second that social media viewership rates are in decline. How much of that permeates across like tangential fields? Like, is video game consumption going down? Is streaming consumption also going down? Like, are we seeing a massive unplug in this generation holistically? Or are we seeing it isolated in social media? Like, so for example, if you're saying like, oh, drinking is going down, well, is it going down across the board, or is it just beer that's going down and wine is staying stable, for example? So that's something that's interesting because that gives us more information around what should we expect from a company perspective in terms of blowout in future years.
Yeah, kids should eat more tacos and drink less. It just, tacos are delicious. Shirley also said at 727, Roblox is booming. It kind of is, but like the really surprising thing is, I don't know if you remember, but there's some Roblox stuff that maybe we won't get into because it's kind of nasty, that happened about a couple months ago. And the reaction from, again, same people, my own family, some relatives, and then also this, church group, and then some that are in the neighborhood that are friends of some of my kids. They're all like, yeah, we don't use Roblox. Roblox is sketchy. There's a lot of weird, creepy stuff on there. We don't like it. We tell our friends to not get on it. And these are not like kids that are like not allowed to play or do anything. Like they can do basically what they want. They're choosing to avoid Roblox. And I'm like, I didn't expect that either. That's like really, but that's Generation Alpha. I think Z is more prone to Roblox. That's the generation that really grabbed them.
Yeah. Yeah, hasn't seemed to impact Meta's numbers yet. Social media is rampant in destroying kids mentally. I think that's Roy's stance, or his ethical stance around refusing to invest in Meta. I'm just an idiot and I don't like money, so that's why I'm not in Meta. Drinking is something you do only with friends. Gen Z only interacts over the phone with friends. That's kind of sad. Board games. Yeah. I'm seeing like a resurgence in real world activities, which gives me a little bit of hope in humanity, just a sliver. Yeah. Board games has had a resurrection. I don't know. It's going to be
Are
interesting.
you a board gamer?
Yeah, man. I'll play board games with you.
Are you a board gamer?
Yeah. I'll play board games.
Yeah, I've got
Yeah. I've
Euro
got
games, and then like my favorite is I actually should use this as my backdrop. I have Access and Ally's 50th anniversary, and we played it enough in the past that there was somebody that did a custom version of it, like
I I don't know if Roy cut off. Did Roy cut off or did I cut off, guys? Yeah, I'm not sure. Must have been Roy. Yeah. Okay. Cliffhanger. Yeah. Okay. Cool. I was waiting for that. Yeah. Roy went to get board games. Oh boy. Yeah. Yeah. I'm sure he'll be back. I'm sure he'll be back. Facebook's numbers are massively inflated spam and bots. They can easily remove it, choose not to do so. That's all social media. I know X is like all bots. It's crazy. There we go. Welcome back. Yeah, Meta took him out the moment he started talking about real world interactions.
yeah. Well, I won't say it now, but I have an idea for my background now. So
Yeah.
stay tuned.
Well,
Oh no.
Okay, let's jump into some questions. It seems Matt Money might not be joining us after all. We'll see.
Can you see me now?
Yeah, you're good, man. You're good.
Yeah. My background may be changing, board game related, so we'll see.
Yeah, I need to find more like board games stuff in my life. That could be fun, like board games. Like, or you know what else is fun that I missed that I want to do more of? Like trivia nights. Those are always really fun. Anyways, enough about my social life. Any news about ETHZilla? I believe there was going to be news about ETHZilla today. I haven't seen anything personally, but I also haven't looked because it's not on my scanners at all. I'm not in ETHZilla.
Yeah, I have to apologize. I knew that was, but it's Tuesday, so no, I'm not seeing anything at all. They've actually gone radio silent since September 25th, which is really interesting.
Yeah. Very quickly, just 2 minutes, we can explain the bull case on BMNR. We both have multiple videos on BMNR that explain why it's a good deal, Anthony. So if you're still watching, we'll spend 2 minutes on it. Roy, do you want to start or would you like me to?
Yeah, you go ahead and start.
So BMNR is the #1 Ethereum treasury. It's a leveraged bet on Ethereum. And so I think there's a couple of layers in the thesis. And the first layer is you're bullish on the Ethereum ecosystem to capture more volume from an institutional perspective around serving as the blockchain of choice, let's say, for Wall Street. And then the second part is, and I'm super oversimplifying this because there's a bunch of questions to get through. The second level is, okay, I'm bullish on Ethereum. I want to bet on Ethereum and I want to have a leveraged bet on Ethereum. Yes. Then which one do you buy? And the reason why I would go BMNR over SBET or others is because BMNR is not only the biggest in the space, but they're also the biggest accumulators in the space on a consistent basis. Every single week they buy more Ethereum. Their goal is to achieve 5% of the total supply of Ethereum. And they also have a good spokesperson in Tom Lee who can make those institutional connections. And so like it's receiving a lot of attention from different investors. I know Peter Thiel is like bullish on BMNR in addition to being bullish on ETH. There's a lot to love about, like, if you were going to go into a treasury company and then it was an Ethereum treasury company, like you're 80% of the way already there. And so then the thesis becomes about what distinguishes between treasury companies. And I want to be with a number one player in the space.
And institutions want the same, also because of Tom Lee. Also, many institutions cannot invest directly in crypto, but they can invest in a digital asset treasury. So they have institutional inflows, much like MicroStrategy. They usually, I think, like MicroStrategy, these sort of plays tend to aggregate into one dominant player. Maybe SBET can break out and it can be a duopoly when it comes to Ethereum. Not as convinced on that. So I'd rather just go after what seems to be, as long as Ethereum does well, just an easy runway. Now, every single one of these that's in Ethereum will do well if Ethereum does anywhere near what Tom Lee or many other bulls expect. I myself, I would not be surprised by BM&R getting to a $200 price point by the end of next year. Not this year, but next year. They are diluting. It's part of the strategy. If you don't like that, don't buy BM&R. A lot of my strategy I explained in my most recent little video on options in BM&R. A lot of it's in my willing portfolio. And so I'm swinging that back and forth aggressively because I'm basically selling volatility. I think it's a really good play, but I'm using those proceeds usually to buy Ethereum or more BM&R stock as well.
Yeah. And I think Shirley also touched on an interesting point that's bullish for both of us. The premiums are just so freaking good for BM&R. Like, it's just amazing premiums. And we both run the wheel on our portfolios. And so that's obviously a compelling point when you're doing stuff like that. Okay. So how do they make money on Venmo? How does PayPal make money on Venmo?
Yeah. So in a nutshell, Venmo used to be just you're sending money to friends at no cost, but there were some instant transaction fees if you wanted to withdraw and stuff. So they make a little bit of money. Alex Chris is monetizing Venmo, which means you can actually pay with Venmo. And merchants also can accept Venmo. I actually just got an announcement related to that today in one of my emails, like just right when we started the show. Haven't looked at that, but it was weird. Under the previous CEO, they made it so that merchants could do pay with Venmo at a cheaper rate than PayPal, which is owned by the same company. It's like previous CEO. I don't know what his problem was the last few years, but he was just anyway. There's a couple of huge growth vectors on Venmo. One is they've had these massive partnerships and sponsorships with the Big 10 and Big 12. They actually back end a lot of the college payment, the athlete payment that's related to athletics, both PayPal and also Venmo that you can spend with your card. And then lastly, with PayPal World, starting in maybe January, it's very early next year. Anywhere that PayPal is accepted globally, Venmo is also accepted. Works just like PayPal. So just think of it as one and the same. Instead of having silos, it's actually an ecosystem under Alex Chris. He's brilliant. It's a huge lever, by the way, being able to use Venmo worldwide instead of just in the US. It's only because of stablecoin and crypto. Would not be happening otherwise.
Yeah. What was the leaked LinkedIn post for PayPal you mentioned earlier in the stream?
I don't think I'm going to say, but it's not like a huge deal. It's interesting, and it takes Venmo in a different direction through a partnership than anything that they've done. There's some Cash App overlap. It's nothing to do with Cash App, but it's something Cash App has kind of done before. I'll leave it at that.
Perfect. What's a good price for BM&R? Look, I think we both agree that we both feel that it's going to go higher. Obviously, not financial advice. Where's my banner? But so like, I don't know. I was buying this at 40. I was buying it at 45, and I was buying it at 60 too. So I don't really care. And if it was at 65, and I think it's going to go higher, I'll buy it there too.
Yeah, and I agree. Like it's very volatile. So it's that volatility works for it, like Monday, and against it, like today. Myself, like I just figured out what part of my portfolio I'm comfortable using, and I just bought in at that point or wrote cash secured puts pretty aggressively. Some of those filled, some of them didn't. But yeah, the price I'm not too worried about right here. Like if you look at the price, basically one way to do this is you look at where the price of Ethereum is, you extrapolate where you think Ethereum will be, and then that can give you put a measure of safety in there as well. But ultimately they hold Ethereum and they trade at a multiple of around 1.4 times their MNAV, which is mostly Ethereum. So, yeah.
Stop. Is this actually true? Okay, hold on. If this is not true, you're getting kicked off the stream.
We stopped the stream and let's see. XAI.
Yes, it's true. Wow.
Oh my goodness.
NVIDIA. Holy shit, man. What is going on?
What?
What is going on?
Okay, I'm a little more concerned now. Okay, what? Yeah.
NVIDIA
Okay, here is Manuel. I'll give him some credit. Manuel is a great follow guy, by the way, guys. If you want some alpha, follow this guy. Oh yeah. I was like, is it going to play? I'm like, oh, that's a big short. Okay, so Manuel said XAI is reportedly expanding its fundraising round to 20 billion, with NVIDIA said to be investing 2 billion in equity portion. Okay, actually, it's not that bad. That's 10% of this fundraising round. So it includes about 7.5 billion in equity and up to 12.5 billion in debt, structured through a special purpose vehicle tied to NVIDIA's GPUs that will power Colossus 2. XAI has massive data center in Memphis. So this is actually very similar to what they did with OpenAI. Shouldn't be too big of a surprise as well. And basically, this is showing NVIDIA's pricing power, that they're like, oh, you want our product? Great. That's awesome. Give us a bunch of money. You don't have the money? Give us a chunk of your company. Opposite of AMD, which again, still very bullish for AMD.
Sorry, Rafi. Love you.
Good job, Rafi. We love you.
Yeah, we were in question and answer period, and we have had people interrupt us with like fake made up news, and it's always really irritating.
This part,
I appreciate you. This is good.
And this part right here is really interesting. This unique structure with the debt backed by the GPUs as opposed to the company could provide a playbook for tech firms looking to decrease debt exposure, especially as interest rates are still quite high. Yeah, interesting.
Wow, that is really interesting. Yeah, isn't that good news for Tesla? Won't Tesla rise on this news? I mean, actually, that's an interesting comment. Hold on, let me put us back to normal configuration. It's an interesting comment, right? Because on one hand, I'm like, well, it's his other company, so it doesn't really matter. It's not like Tesla pumps every time a rocket does something. But on the other hand, I think there is a proposal on the table right now to be voted for XAI and Tesla to do something. I can't remember the specifics of what that was for, Roy. Do you remember?
Yeah, so shareholders have the option to vote, and the board was neutral on the recommendation at the annual shareholder meeting, whether or not they should take a stake in XAI directly, which I think that they should. I think it integrates well, especially with what they're doing with Grok. There's other implementations, certainly with Optimus, and also the Robotaxi, so it makes sense. Right before that, Shirley had another good comment. She's on a roll at 742. And Tanner and I made this comment too with the previous NVIDIA deal. They're sitting on just a ton of cash, and they got to do something with it. And at some point, you do ventures funds or you do something like this. So, yeah, no, I think I like this for NVIDIA. I really do. And maybe I'm biased because I'm an NVIDIA shareholder, but yeah, they're just a great company. So,
yeah. Don't want you to speak for Matt, but what is his bear case on BMNR? I'll save that question just in case Matt does join us magically. Like when we speak his name into existence, he'll just show up backstage. But
I can share it. He thinks that all crypto is a scam, and anything that Tevis touches turns to mush. So
now that second part is a legitimate bear case. You guys should be wary of whatever I get into. Okay. Wow. If NVIDIA actually, let me put this in the regular queue of questions. If you guys have a change the title to DGen Weekly, we might. All right. Don't threaten me with a good time. We might.
I did make 2 sports-related predictions market bets this last week. That's not going to be a normal thing, but I told Tevis I'm a DGen now. Now, one of the bets was like $25 and the other was 30. So,
bro, I have had a bad betting week. I bet the Eagles, who lost to the fucking Broncos, broke your 4-0 streak, and then I bet the Bills, who lost to whoever they were playing 2 days ago, and to the Patriots, and they also lost. And I'm just like, all right, taking a break for a couple days. This was good when I was in Europe because I was no betting for a month, and I was like, okay, I don't have to think about it.
But Amit bet on the Chiefs last night and lost, right at the end. And honestly, like I told him, is like when he mentioned like what was happening with the score and everything, if my phone was right there, I had it plugged in. I was like, I would have put 50 on the Jags. Just T-Law, why not?
The Chiefs lost the Jags. Holy moly, man!
Yeah, Trevor Lawrence is really good, dude, and the Chiefs are not that.
$1,000 on the Chiefs.
He did, yeah.
Oh
and it was like, if you see the prediction market, well, okay, I didn't grab a screenshot of this, but I think that there was over 20 million in bets and predictions just on the Robinhood platform. And I believe if you exit your position early, it doesn't show there, but you essentially double pay the fees. So like Robinhood is just like raking it in. This is going to be a massive product for them next year. Didn't exist last year, but anyway, yeah, $1,000 for the Chiefs, and it was like the probabilities were like flipping like this all game. And when it comes right down to the end, there's people that are just slinking. Yeah,
Josh had 10K on the Bills too on Sunday, so that sucks. Hey, but look, I kind of want to comment on this. And granted, I only lost like $100 on the Eagles, and I think $100 on the Bills. So like, definitely not $1,000. But hey, man, this is exactly what you guys were saying about Robinhood making it so freaking easy for you to make, like, having it all in one app. And I don't know how easy it is because I don't have the app, but
it's easy.
I would imagine it's easier than me funding my DraftKings account. But at the same time, one thing I will say for you guys in prediction market, so like that, this is the scary part, is how easy this is. The other side is this comment where it was like, hey, just sell halfway through. It's fine. It's easy. I can't find it right now. But
that's what I did with that first bet, which is a little bit larger. And I know prediction, but I mean, I'm going to call it the way I see it. So I sold out midway through. I'm like, let me cover my capital. And I made like 50 or 60 bucks out of it. So
they were like, hey,
yeah. Well, and so then I also wanted to see how it settled if I left it automatically. And yeah, within 30 minutes, you get a notification. Now, the thing is, you do pay 2 cents to enter and also to exit. And if you let it close out naturally, you're not paying any fees at all on the closeout. So
here's the thing, Roy. I can't do this with freaking DraftKings, man. And this is the bull case around prediction markets. Is like, it's a live market and I can do whatever I want. I can sell out at any point, at any time, and there is a price and there's a market for me. With DraftKings, I am only held to whenever they want to throw me a bone. And usually it's when my bet is winning that they're like, hey, do you want to cash out now? Hey, do you want to cash out now? But when my bet is losing, I can't sell for pennies on the dollar, And so it's incredibly frustrating because like when we bet different opposite sides of that 49ers versus Rams game last time, last Tuesday or like Thursday, whenever we did this episode last, I think it was Thursday. You literally cut halfway through. You're like, okay, cool. I have made a multiple on my money. I'm out. And I was forced to hold this thing the whole way through. And I just, so it's like that, take it from somebody who uses DraftKings. If I had the option to do prediction markets instead of DraftKings, I would do it 10 times out of 10 because of that simple fact. I can always sell at any point, whether I'm winning, whether I'm losing. At any point in the event, there is a market that's already made for me. Versus DraftKings, I'm always held to the third party throwing me a bone whenever they want to. And that is not a position of leverage that I want to be in. So for that reason alone, I hope Robinhood crushes all of these betting apps.
And they are eyeing international expansion along with Kalshi. They may hold off on that and also releasing new features until some of the lawsuits clear up. There are some cases where Kalshi is being sued. A lot of it's countersuits, or not even countersuits, but suits against prohibitions in actually 5 different states. One of them has not gone favorably so far. It's still early. The other 4 have, for Kalshi and also Robinhood, who's in the mix. but I think it's not inevitable. But like given the current administration's view, and if you look at the board of Kalshi, who's on there, certain relatives of Donald Trump, they're going to probably have favorable results. Of course, state level, you can never tell. But yeah, DraftKings is getting destroyed as a stock just because, well, both they and, I'm not in these stocks, but anything that's tied to that, they're starting to talk predictions market just because they realize the opportunity. But yeah, it's almost a monopoly. Actually, Kalshi has exceeded by volume far over Polymarket. And if you look at Robinhood volume alone, it's pretty easy to see, like if nothing else changes, maybe in a quarter or two, Robinhood alone will have more volume on predictions market just in the United States than Polymarket worldwide. It's crazy.
I mean, look, man, if it's a superior product, it's going to win out. And just from that simple fact alone, it convinced me that it was a superior product because we literally did a live test without even realizing it. I bet the Rams on DraftKings. You bet the 49ers on Robinhood. You cashed out halfway through. I couldn't cash out, even though at some point the Rams were winning. And I was like, oh, great. Because DraftKings just didn't want to offer me that option. And sometimes they do, to their credit. But I'm always held to what they want to offer me. Whereas it's a more pure market in the Robinhood sense, because I'm saying, okay, if you want to buy my contracts right now for pennies on the dollar, then somebody else will buy them. And it's a market. It's two-way. Whereas for me, it's like DraftKings is the centralized party that can either make a market for me or just leave it.
Yeah.
So anyways, that was interesting that we chatted about. This is so random. Like we're halfway through questions, guys.
Rapid fire.
Yeah. Rapid fire. Okay. What are you buying, Roy?
Might buy more Air, bought more PayPal, bought more BMNR. And I don't know what that ticker is. Navitas, is that it?
I have no idea.
Yeah, I'm not familiar with that one.
Yeah, he sold me on Robinhood. Yeah. Same problem with DraftKings last night. Yeah, exactly, John. Okay. Have you sold HIMS? If not, how are you feeling for Q3? I have not sold HIMS, and I'm kind of mixed because they have some tough quarters to get through for them to meet their guidance. And I really hope that they don't lower guidance because that's going to be a really bad look for them. So, it's going to be really interesting to see what testosterone does. We obviously want to see new products launching with the hormone therapies. So Q3, I think, is going to be a very important quarter for HIMS. I might trim, quite frankly, some HIMS before the earnings, especially because I got spooked a little bit in the last quarter where they didn't triple beat. And so it opened the door for that being a possibility this quarter again. So just something to keep in mind. HIMS is very much a hold for me right now.
I think quarter 2 of next year is when we see a lot of acceleration. Until then, it's rough waters. So I'm holding my position the way it is. I'm not adding to it. Obviously, if we go down a lot of the risk is out of the stock, and I'll look to add. But it's a smaller position in my portfolio now. It's probably like 3%, maybe less than that. Because a lot of the HIMS was in my swing portfolio, and I did take some gains as it ran up immensely in that last run.
Yeah. Yeah, exactly. HRT, Canadian expansion early next year, might have a tough couple of quarters until then. I agree with this. I think Roy does as well.
And beyond that, like you get past the year-over-year comp where they have a lot of GLP-1 that they were compounding through the 503A or was it B? I got those back. Where it's you also have give enough time at that point for Deidre and Mo El Shwani, who've come on board, a couple others too.
Actually, really not Mo, because Mo is no longer the COO.
I missed that then. I knew that the Amazon.
Sorry, I'm talking about no, not Mo. Mo is the CTO. I'm talking about
Amazon guy.
Nader Kabani or whatever.
Yeah, that was weird.
I did not skip anybody's question. Maybe if I missed
Maybe.
it,
Ask it again.
I have 25 questions that are queued. All right. So unless you want to donate 99 cents, wait. Okay. Top 5 ETH treasuries. I couldn't even name you 5 ETH treasuries, bro. Like, I just go by which ones are the biggest ones, and BMNR is the biggest one, so that's the one I like the most.
I like BMNR. I like SBET. I like ESIL. I'm only invested in BMNR. BTBT is okay, but it's not a pure treasury.
Yeah, exactly. Fight back, Tevis. My question. Why did you skip my question? Okay. One big reason I don't plan on selling anytime soon, it's America's 250th year anniversary. Do you think Trump will allow these companies to slow down spending and tank the market on the 250th anniversary? Absolutely not, Ace. Good thinking.
But we're not a fascist country, so I mean, he can provide incentives, he can encourage, he can cajole, but
Really, Roy? Because
yes,
it seems to me like he's buying direct stakes in these companies right now. So
that does give me pause. That does give me pause, and I don't like that.
Shirley, thank you for the $1. Roy is going to put it towards his internet bill.
Thank you, Shirley.
Okay. Which one do you guys use? I think we've answered this in previous live streams. I use Grok and ChatGPT. I use all 3 of them actually, but I have Gemini, ChatGPT for like through corporate subscriptions, and I use the entire suite because we work a lot with AI, and so I need to use them for work, and then I use Grok personally, which I pay for out of pocket. That's the only one that I pay for out of pocket. Right?
Yeah, we pay for ChatGPT. It's what I use most. It's gotten worse. I feel like it has since mid-September, maybe because of the Google indexing change. We talked about that yesterday on Tech Bros Weekly. Gemini second. Gemini has been impressing me more and more. I don't even pay for it, and Grok is not great. Grok, by the way, did you catch any of the? You didn't. So we need to start calling Tanner Lori because that's what Grok calls him. Lori, like a girl's name. So
what?
He asked Grok basically like, "Who am I and what do I do for a career?" And it said some weird thing about that was unrelated to him and gave him the wrong name and wrong handle, all wrong information multiple times. And I can't remember what it said about me. Like I think I was related to the guy that was bearish back in 2008. That's been anti-crypto. Anyway, it doesn't matter. But no, it's Grok is not really very good at all, and it seems like it's actually gotten a lot worse. Oh yeah, here it is. Based on our previous conversations about your public portfolio, you're a student at Tulane University, actively engaged in tech and Bitcoin communities, and yeah, it's weird. I don't know.
Grok gave the right answer. Tanner's living a secret life as Lori. So
yeah. So
you heard it here
so
first.
we call him Lori now. Timeline Tanner or Lori?
Okay, subscribing to these playlists. Thank you, LA Fanatic. That's great. Love to hear that. Now, Roy, are you ready for the craziest thing? I'm actually going to make a post on this. The craziest thing.
Oh no.
How's Gemini doing in the stock draft? Well, Brock, I'm so glad that you asked, my friend, because this is what Gemini's doing in the stock draft. Gemini's up.
Plug power, man. Plug power. It picks and it's just crushing. And I have no idea why.
67%. Are you freaking kidding me?
I'm the big loser there.
What? Yeah. Roy's the big loser, only up 13% since June 24th. June 24th. All right. Gemini's up 67%, just lapping all of us. Holy. And the funniest thing is that Gemini picked last. We had ChatGPT pick before Gemini, and then Gemini picked. And Gemini just picked all the degen things and just crushed. Yeah, exactly. Gemini needs his own stock stream, I swear to God.
Yeah. Yeah, it's all like high beta names, and we're in a bull market, so I guess it makes sense. But if we get a pullback, we'll hopefully beat Gemini. But man,
Thank you, Brock, but you should really donate it to Gemini because holy crap, man, what is going on here? It's not. There's no alpha to be had with Tevis. Yeah. So there you go, Roy. You heard it here first. You are slightly underperforming ChatGPT, and Gemini's just fucking crushing everybody. So there you go.
yeah.
Roy, your dream of buying Tesla at $150 is going to remain a dream. I added that as a question,
We'll
but
see.
it was kind of a statement.
Probably, but if there's a chance, it's quarter four. Quarter four will be abysmal. Question is that going to be enough to get people to sell? Probably not. So, and I'm not going to wait till 150. Like honestly, if we're looking at 250, I'll add a little bit. As we go down to 200, I'll just start DCAing. Under 200, I'll buy fairly greedily. Of course, it all depends. If like Elon Musk has gone absolutely crazy and has renamed himself to Lori, probably not. So.
Hey, man, there's only one Lori in our hearts, and he has a mustache.
Yeah.
Travis, do you have a reason the market sold off today? That guy tweet on Monday evening made a statement, market setting up to sell off, I guess, to buy the dips. Do you know what this means?
Yeah, I mean, like the market faded a bit, but I mean, like it's down like 0.5% on the Nasdaq and 0.37% on SPY. It's flat, not a big deal. Consolidation is good, and before earnings, oftentimes we'll see this too, a little bit of a pullback, just because people want to take and bank some profits, and there's always uncertainty around earnings. So,
yeah. Also, yeah, Lori goes live in 30.
yeah.
CNBC just uploaded a Kramer Jensen interview. That's going to be interesting. Yeah, that Lori guy was bullish on SoFi. This is I love this for our dear friend Lori. So I hope this sticks. Let me see. What was this, Roy? That you? Let me just.
Technovic asked a question. Yeah, pull that up if you don't mind. Just didn't want that one to be missed. Yeah, just real quick, rapid fire. It's part of. Okay, so UPI is a massive wallet in India. PayPal World is the announcement that's relative to that. They announced this like a month ago. Look into it. I've done a separate video too. Basically, it's a worldwide global integration of a lot of wallets. How does it benefit PayPal? Essentially, anytime a UPI wallet user is checking out at a merchant that accepts PayPal and not UPI, which they can suddenly do once this officially launches here in the next month or so, then PayPal gets that transaction and it's PayPal transaction fees. Vice versa, somebody using PayPal going to UPI, UPI gets the fees. PayPal always gets a small cut as well. You can kind of think of it in terms of, although we don't know the cut, like a debit card interchange fee, which is fairly small. But if you look at that between Mercado Pago, UPI, Ooredoo, TinPay, there's one other as well. There's like almost over 2 billion wallets interconnected now on PayPal World. So, and there's more coming there. Looked at the Lincoln stuff, the post that I had, that kind of hints at some of this. And Tevis is gone.
I don't know, man. Somebody thought it was a good idea to call my phone, even though I have it on Do Not Disturb. It always freezes my camera when they do that. So when I find out who that is, it's probably going to be fucking Steven Fiorillo because he's the one that just calls right through my Do Not Disturbs.
It could be Lori.
It's probably Steve, or it might be Matt. There's not going to be, or like my mom or something. And like it always makes me nervous because if people call through my Do Not Disturbs, I always like think of the worst. I'm like, oh shit, it's like an actual emergency. But I'm sure it's fine. It's probably Steve being like, "What did you say on stream, Gemini?" Blah, blah, blah. Steve's a big time YouTuber now. I can't even talk smack anymore. Yeah, exactly.
He monetized on his first stream.
Did he actually
monetize? Yes.
I mean, that's like, dude, you do your first stream with Amit and then see you'll monetize too. Like,
Oh yeah,
it's just he's got heavy backers, bro.
that's
But
right.
he's also a great guy, and I wish him all the absolute best.
Oh, yeah.
Just don't call me again, Steven. Yeah, Mom, I'm doing a live stream. Leave me alone. They're all in Europe, and it's 2 a.m. for them. So like, if it was actually her calling, it would be some type of emergency that would like
Oh no.
send me spiraling. Anyways, so it's probably not her. It's probably Steve. But I'll see who it is, or some like random freaking Indian scammer trying to get me to, oh my God, your phone's been shut off. Give us Bitcoin. Anyways, what do you guys think of Oscar, Root, and Shift4?
Oscar is a decent company, but I prefer to invest in great companies. I'd get out within 3 years before Trump is out of the administration. Shift4, I really like. It's an attractive valuation, worth looking into as well. If I wasn't so heavy in fintech, I'd probably take a position. Root, I don't know.
Yeah, I saw Root because people were touting it as like a better lemonade to see the financials. Shift4, I know Tanner's like all on them. I've never really looked into them that deeply. And then Oscar, I took a look at Oscar, and never really took a position in them. I know it's like a cult favorite. So, okay. Thoughts on HIMS into Q3? We answered this. Does PayPal have some type of coin? I think you mean Roy, because I don't know anything about anything.
That's for you. You got to answer the question.
Does PayPal have some type of coin? The reason is going up. No.
Do you know what he's referring to? Okay, real
they have a coin, but
Yeah.
that's not the reason they're going up.
Let me. Well, he might be referring to what's happening as far as the market cap size on this. So I'll just show this real quick. I'm not going to spend a lot of time on it. But you look at that total circulation, it is exploding. A lot of it is it's going on multiple chains, and then they have a major partnership along with it too. You look at actual payments. I'll do a separate post on this at some point in video. It's actually very small. There's very little penetration, and it's just three: USDT, USDC, and PayUSD that actually have any meaningful volume for actual payments. But it's so tiny right now. So it's good, but yeah, that's not why PayPal is going up.
PayPal is going up because Roy tweeted about it, and that's usually how it works according to Twitter.
Definitely not.
Yeah. You should also tweet the stock chart and say you're welcome, like some of our friends that we know.
Dude, like I don't understand like the hubris of people. I'm not going to name them, but there's a large, not who you're thinking of, but relating to PayPal, that basically said, "Yeah, I'm going to make this stock go up now because I'm going to start tweeting about it." And I'm sure they're going to take credit for all this, even though like it's so demeaning to the actual company. Like whether it's PayPal, whether it's SoFi, whether it's NVDA, it doesn't matter. Like they've produced real value. The market sees it. And yeah, maybe something that you say gets people's attention. They're like, "Oh man, it is a good opportunity."
Dude.
But credit the actual company. Like, give me a break.
It just made me laugh because, like, all right, not naming any names. You're an account with like 4,000 followers. You made a post with 100,000 impressions, and the stock doesn't go up in pre-market. The stock doesn't go up, in the beginning couple hours of the day, and it just shoots up randomly at like 11 a.m. And then you post a stock chart and you quote tweet your news that you broke that has 100,000 impressions, and you say, "You're welcome." Like mic drop. You're welcome. I don't know, man. I don't even know what to say. It's just, I think like that kind of reality distortion field is a very powerful thing if harnessed correctly.
Yeah, and I'll say Dino may or may not have hit the nail on the head with the PayPal guy, which if he's right, that's somebody I follow. So it's not hate, but I mean, reality is take it down a peg.
Yeah. Buying more BMNR. Yes. Next question. Have either of you looked into Grab or discussed with Amit? No for me. Yes for Roy.
Yeah, good company. I think it'll do decently well, but again, I didn't see it like as an amazing opportunity, um, and it's been pretty good for a minute. So I just found I like a very concentrated portfolio. If I had like 20 names that I was investing in or 25, I'd probably get a little position, but no concentration. Yeah, it's inverse Tevez. Yes.
Yeah, exactly. Inverse. Do you buy more BMNR below 60? Yes. Next question. Hey guys, can you do a deep dive? I think with each dilution of BMNR, we also get dilution of ETH per share. They IPO'd at 6.1 million outstanding shares and now at 230 million outstanding shares. Cash King. Roy, thoughts here?
Yeah, no thoughts there. Nothing to add. I haven't looked at. I've not been in an IPO, so I can't comment on that. I'd have to take a look.
So I have here BMNR rocks, and this is a dashboard that shows you BMNR statistics. And this is interesting because every single week BMNR adds more stuff, and you can see the Ethereum for this is ETH for 1,000 shares, and it goes up. And you can see the ETH value. Of course, I think they want me to pay for me to actually see the chart here. But yeah, like they're accumulating more and more ETH on a weekly basis. So again, I don't think like I'm not really thinking of it too much from a dilution perspective right now. Like it's not a huge, it's not playing a huge role into my bull thesis because I'm seeing it as I'm operating under the assumption that institutions see BMNR as the only game in town to get into Ethereum. And I also own underlying Ethereum as well. So I think from that perspective, like I'm not concerned. At the same time, Cash King, I haven't done like a super deep dive that's very technical to break down all the components around the dilution per share and the ETH per share and how that's evolving over time. So it's more of a thematic response as opposed to a granular, numbers driven one. But that's just sort of where I stand. I don't know if Roy has anything supporting to add.
No, I agree. I think you said it well. But yeah, I've not looked at it since IPO. I've not tracked it. So
yeah. Okay. Cool. Any rebalancing of your portfolios? Have your convictions changed much in the last 6 months?
I think for both of us, we've shifted some away from Tesla. It's run up, so maybe that was a mistake, but at least for me, that's been a big shift. And away from HIMS too. I added more to PayPal, which has been painful. And then Airtest Systems is a new holding of mine. Added some new. There's been some shifts. I try to do a portfolio update at least every quarter, so you can see some shifts there. But
yeah, I think for me, in August, I started a position in HIMS, and it grew to be a top 3 position for me. And so we've now crossed the 1-year mark of me holding HIMS. Me and Roy started around the same time on HIMS, so it's been a year for both of us. In the last 6 months, I started a position in Nebius and in BMNR, and both of those are now larger positions. I started a position in Duolingo, and I did a trade for UNH. And so I think for me, there's short-term trades or swings, and a lot of that is dictated around the wheeling portfolio and the premium income that I'm making from that. UNH, I still have spreads on UNH, so I'm planning to close those out at some point soonish. Those are up about 40-ish%. Nothing crazy, but it's still some exposure. Like it was green today, so it was good. I think I want to position myself a little bit more defensively. I think my conviction in HIMS is lower than it was at this point last year. Or I shouldn't say that. It's definitely not lower than at this point last year. It's lower than at this point 6 months ago. And I think my conviction in Nebius is much higher today than it was 6 months ago. And I think my conviction in BMNR is like I'm positioning it to be in the top 5 for me. So that's the sort of bullish narrative, but at the same time, I still have like 15% in cash that I'm just running the wheel on, like cash secured puts that are not assigned. And if I need to, I can push those out and be more conservative with what I'm doing. Of course, what hasn't changed is SoFi is still the top position. It's over 20% of my portfolio. Bitcoin is still a core holding, and I still have like my theses. Of course, Tesla is a lower position for me. That was 6 months ago. Tesla might have been, over 10%, and now it's like around less than 5% even. It used to be 7, but I trimmed it down even further to 5 since it went to like $450. And so, yeah, I would say those are my big rebalances. A little bit less bullish on, I'm still bullish on Tesla, but a little bit less concentration on Tesla as a result of the run up and the financials, their earnings, and a little bit less concentration on HIMS as a result of their earnings, and then a little bit more concentration on Nebius for the same reason. Hope that helps, Brian. Do I own CleanSpark? That's a good point. No, I don't own CleanSpark. Do we know what happened with Derek White yet? No.
No, we may never know.
Yes, we may never know. I want to have a question that Roy can answer so I can bookmark a whole bunch of questions because I'm losing the queue. Is Rocket Lab very overpriced here? This is a Matt Money question if I've ever seen one, but I'll let Roy.
I think it's running a speculation of Golden Dome, basically the United States version of it. At least that's what I hear. If that's a real thing, then no, it's not. If it's not, then it's a buy the rumor, sell the news type of event. And it may be that either way. So I'm an outsider on it, not well versed. That's just my very surface, very amateur level thought.
Yeah. And I am still trying to find. Oh yeah, we didn't talk about App Lovin'. Do you want to throw that up?
Yeah, I think maybe we'll just barely touch on it. Basically, it's rumors that they're improperly using customer data, and there's some allegations as far as if it's actually effective. It is. It's a real product. It's a really excellent company. On the data side, I don't know. It may be an opportunity to add. What did it do today? Because I saw its massive drop yesterday. Let's see. Did it continue to sell off? It went up 7.64%. Yeah, I would guess it's probably a nothing burger, but it's just a guess. But they're very well positioned. I've been saying this for a while. Ironically, I didn't take a position after they fell on the for a silly reason during the earnings, but yeah, Tanner did. He got out of the trade desk and got into App Lovin'. Kudos to him. He's very agile. Like if he sees a shift, he will pivot.
Mm-hmm. Okay, cool. I bookmarked all the new questions. Would you sell an Ethereum position and just put it in BMNR? And I see this being asked here again. Why not buy Ethereum and buy BMNR instead? Is there any advantage choosing one over the other? I don't understand this very well, and I already have positions in both. So maybe we can tackle both of these questions.
Two reasons. One is BMNR is like a leverage bet on Ethereum. Second is you can sell options on it. I mean, that's a big part of the strategy. That's very lucrative for us. Don't do that if you don't know what you're doing. If you're curious what I'm doing, see my most recent video that came out earlier today. I would not sell all my Ethereum and buy BMNR despite the leverage, because leverage works both ways. Crypto winter, and I see some people referring to that, it will come at some point, usually when you least expect it. So people predicting it right now probably won't happen. Could it happen next year? It absolutely could. BMNR will underperform dramatically. Look at what MicroStrategy did in the previous crypto winter. So, yeah.
Steve texted me 4 minutes ago. He said, "Yo," and I said, "I'm on stream, recording with my phone. Don't know if you called, but I suspect it was you." I told you, I freaking called it. Steve always calls, and then when I don't pick up, he texts. He's like, "Yo," and so he's maybe we can have him on. Yeah. I don't know.
Steve, I don't think he mind me sharing one of these two texts. He said, "BMNR, I am so bullish." So I won't share the other one. But
I said, So I said to him, I don't know, like I'm texting Steve. I said, I don't know if you called, but I suspect it was you. He responds, I did. I was going to say BMNR to the moon. I love this guy.
Yeah.
So
Yeah, he's very bullish.
Steven Fiorillo, the world famous YouTuber, is watching our streams, guys. I'm counting on a special Halloween episode of Bootleg Weekly. Roy dressed as Alex Chris and you, Tevis, as Tom Lee.
Nice.
Cool. Yeah.
You've got to do the Pudgy Penguin version of Tom Lee, though. So he was on Time Magazine. So it's not meant as an insult. He is on Time Magazine as Pudgy Penguin. I don't know if you saw that.
Yeah, I mean, his profile picture.
Yeah.
Yeah, Anthony Noto on the cover of Wharton magazine. I saw that. That was cool.
Mm-hmm.
Why doesn't NVIDIA, if it has so much cash, pay a better dividend than more than 1 penny?
Because they don't have to.
Yeah, basically. They have better uses for the cash. Yeah, the bear case for BNR. Yeah, and like I think we can tackle the ETH, the crypto winter stuff because Matt abandoned us. Serious question about BMNR and ETH thesis. So with proof of stake Ethereum and accumulating assets with it, when more and more ETH treasuries accumulate Ethereum, this centralizes the fate of said assets. Not alarming? Question mark.
There's a certain merit to that, but if you look at the scale of BMNR and others, BMNR will be the largest Ethereum treasury, and it will own 5%. Now look at other chains relative to some of the largest holders. That's nothing. So it does become slightly more centralized, but it's overstated as a bear thesis, which I don't know that you're saying it as a bear thesis, but yeah, not a concern. Plus, they're going to be a validator as well. Like the health of the chain. The nice thing is that the more that you have, the more you're invested in the health of the chain, including being a validator, which is why when they eventually stake, they will have some that's actually staked natively. It's not going to all be liquid staking or whatever else they decide to do.
Yeah. Cool. What's keeping DraftKings from adding the prediction markets as opposed to what they're doing right now with betting markets? That's an interesting question.
They probably will. I don't know if it was DraftKings, but there were some that were looking at doing predictions markets at some point. And it's tough. It's kind of like what Google was going through at the very beginning of the AI wave, where they were very behind because they're like, we're a monopoly. Why would we go after a new thing and disrupt our own business? Now they're being disrupted, and so they'll make that pivot. I don't know if they have the tech competency to really go after this. I don't know DraftKings well enough. I don't know if people actually keep money there. The big advantage that Robinhood had is the money was already there, and so they just added another way to use it. That's a layup.
Yeah, I don't know if they would add it or not. I think it would be like, I think prediction markets are superior to just betting through an intermediary. Like, if I go on BetMGM or DraftKings or any of these companies, Bet365, like I would rather just do prediction markets. If I had the opportunity to do it, I would do it 10 times out of 10, like I said before. So can you answer why Bitcoin and ETH dropped exactly at the same time today? Yeah, dude, it's called volatility. Like, you see markets and algos manipulating markets. It's the same exact thing. Like if some big institution is selling out, they're usually selling out of both, so.
Yeah, when Bitcoin drops, usually other crypto drops.
Exactly. I'm worried about Matt. I'm sure he's fine. He said his meeting was running late, and if he could join later, he will. But if not, then he's not. Yeah. Okay. Let's see. What are we thinking about Amazon?
I think it's okay. It's cheap relative to historic Amazon prices. I think most of the other Mag 7 are more interesting. And Amazon is doing a lot on automation and robotics. Somehow they've done way less, kind of like Apple, but not as bad with AI than I would have expected. If you had told me Amazon would be here relative to actually implementing LLMs versus like back in 2023, I would have said you're a liar. So I think that they're decent, but I would rather invest in pretty much any other Mag 7. except for a certain one that I won't name.
Apple.
Yeah. Well, and Meta too. But yeah, for not because I'm not bullish on Meta, but yeah.
You would rather invest in Meta than Apple, let's be real. Like you would get over your ethical qualms and invest in Meta than put your actual hard-earned dollars after Apple.
Probably, yeah. If I was forced to pick one of those, yeah.
Okay. I love you guys, but I've been in back-to-back meetings all day, and I started the stream 5 minutes after a meeting. I need to wrap this up soon. It's been 2.5 hours. There's 15 questions left, and I'm going to try
20 seconds. 20 seconds on each. One of us answers, the other doesn't. Let's go.
What's highest percentage of your portfolio that you would let anyone's stock be? Well, I mean, for years, I had Tesla as like 55% of my portfolio. So
90% Palantir.
So yeah, pretty high. How did you find AEHR, Roy?
The transcript posted something interesting from the previous earnings call. I was looking at companies, looked at a lot, struck out on a bunch. That was one. The more I looked, the more I found gold.
Cool. Is 3,000 shares of BMNR enough?
Maybe.
Where's my
Depends.
Not financial advice. No. Have you looked at Root? No. Off-topic question. Do you guys have any places you'd like to travel to? I'd like to spend a little bit longer than 20 seconds on this. This is a great question, Dino. Thank you so much for it. It's way better than people asking us, is it a good time to buy? So Japan was on my list for a long time. And then I went to Japan for a month. And now I really want to do Argentina or Brazil or just like South America in general would be really good. How about you, Roy?
Yeah, there were very few places that I wouldn't want to travel. There's some I would not take my wife or kids. I love language. I love culture. I love history. So, but Japan is a big one. I'd love to go to Japan at some point.
It's very unique. It's gorgeous. Yeah. Yeah, Peru. I actually almost went to Peru because I had a job opportunity to work in Lima for a year, and I was this close to signing the contract, and I didn't. And it's like not a regret, but something I look back on. I'm like, I could have been in Peru. So that's a little fun fact that you'll never hear unless you're 3 hours into a freaking live stream. Roy, can you explain why you sold out of Tesla?
Yeah, Elon was distracted. He was limiting the TAM with some of his actions. Revenue from robotaxis and also Optimus appeared to be pretty far off, and same with full self-driving. And at the same time as there's consolidation and some headwinds because of regulation against Tesla. So, yeah.
Yeah. Yeah, Cusco, Machu Picchu. Greece is gorgeous. I've gone several times and highly recommend. It's great. Tokyo, top of the list. Yeah. Don't go to Venezuela. I mean, sure. Will you go with me to India to get my... No, I definitely will not go to India.
I've been to India. I loved it. So but I wouldn't take my wife to where I was.
I've been to the Dominican Republic. Great time. Yeah, I've been to a whole bunch of countries. I've been to 31 countries. So definitely want to do more. Portugal, been to Portugal. Portugal is beautiful. I want to visit Portugal now. I've already been, but I want to visit now because that's where Manuel's is, and I want to just meet the boy in person and thank him for all his contributions to the retail investment community.
Okay, I know we're trying to get through these, but just one more. 818 Elman S. I got a comment on that. I have to.
Okay. Hold on. Let me scroll back.
Okay, let me ask you as
you look at it. No, I have it bookmarked, right? Roy, I have it bookmarked. Okay. I'm saving it for the end for the comedic value because I know what you're going to say. Yeah, 31 countries. Ireland. It's on the list. Dino, if you are in Ireland, DM me on X because I might actually visit. And same with a lot of you guys. If you want me to visit your country, DM me and let's set it up. I will never say no to a vacation, especially living in Canada. Okay, will the beginning of the new year seem like a time to sell and rebuy the dip for crypto winter? So
I'm not going to try to time it. No.
exactly. I would say yes for crypto winter. Like it's going to happen. No, I'm not going to try to time it. Are you guys still seeing a crypto winter next year? Jesse said he's going to get out of crypto in November. I mean, yeah, Jesse's a smart guy. I do think crypto winter is coming. This is also the reason why I was not like, why I didn't know what to do with BMR, if it's going to be short term or long term for me.
Yeah. Usually you have a blow off the top first. Look for that. And then after that, I'll take some off the table if so. But otherwise, I'll just keep holding and adding.
Yeah, it's a good advice. Not financial advice, of course. What's your price target on NVIDIA by end of year? That's a good question.
I don't have one. It's a company that's going to go up over the next 5 years. I don't do a price target on it yet.
Cool.
Not even selling covered calls now.
Really?
Yeah.
I think it largely depends on the rally, if the rally can keep going. And I don't own NVIDIA, and I'm just going to pull a number out of a hat. NVIDIA 215. That's what's going to end the year.
That sounds good. Like the thing with NVIDIA is earnings season is all earnings season long with NVIDIA. So like I have to be careful with covered calls because the premium is not like on earnings week for NVIDIA, I will sell covered calls. But the rest of the time you have massive moves, but the IV is very low. So I'm like, I'm not taking that risk.
Yeah. Yeah. I mean, I'll take 215. If you guys think 215 is a good amount, let me know. And that's officially my price target now as somebody who doesn't own it or follow it.
Yes. No. I don't own it, but it's cool. Hope they make it.
Sure, I agree with Roy. What will make Steve cry more? Please don't make him call me again and freeze my camera. Open all his milk bottles and let it set overnight in room temperature, or putting fingerprints on his PSA 10 Charizard. I think the Charizard, honestly.
Fingerprints, yeah.
Yeah, definitely. Thoughts on CFIR Cypher versus Iron?
Yeah, they pivoted successfully away from their mining business, which was the only way that mining was actually going to work. They're successful. Iron's running, but Cypher's doing well. But I don't have any deep thoughts on it.
Yeah. Do you still think HIM's 100 by end of year, Tevis? Yes. If it's going to be 100 by end of the year, they better get their ass moving. But with HIMs, like they can really move very rapidly because they have a high short interest. The thing to look out for with HIMs is if they break out of that $74, $73, whatever is like the triple top that they have. If they break that, then I would be like, absolutely, I'd bet a lot of money on 100 because it's a big psychological level. So I think it gets close to it. And there's a huge short interest. So you're going to see a short squeeze in between. But they need to break that number. So that's the thing you have to look out for him. So if they come out on earnings, and earnings is great, and they go to $75, then you're going to see a continuation in the run. I think if they get rejected at the $70 range again, it's going to be really tough. Sorry, a little bit of astrology there.
Love it.
Thoughts on ASTS and Rocket Lab? Yes.
Yeah, I'm not knowledgeable in that.
Do you think my $80 covered calls on PayPal are safe? Something I'm not used to saying.
Yeah, probably, but I mean, it depends on the time frame. Like if you're talking end of the year, maybe not. So end of the week, yeah, I mean, probably.
Yeah. Okay. Thoughts on CRDO? I don't even know what that is. So no. And the last question, because it's 2 hours and 30 minutes and I'm calling it here, guys. I'm tired and I still have to go to the gym today and I'm like fucking exhausted. And I wanted to make a video today, but I didn't have time because the stream is 2.5 hours long. Is for Roy. Do you have any comments on the new Verizon CEO and the future of Verizon under this new leadership, this new vision?
Yeah, usually when a company announces a new CEO, the market gets like really excited. This is a little bit of a surprise announcement, so maybe that's a factor. But you saw who it is, right, Tevis? I'm sure you did.
I did. I'm sure you did as well.
It's a fellow by the name of Dan Schulman, and the reason why if you don't know him, he was the CEO of PayPal for a long time. Honestly, 4 years too long. Started off and he did okay. I wouldn't say amazing, but there were some good acquisitions. He did lead PayPal and actually become separate from eBay, helped them become public and everything. So I think he did some good things on the front end. I wouldn't say he's a great CEO, but he was decent. In the last 4 years, if you wanted to destroy the company that you had and you made a concerted effort, you could probably do more than Dan Schulman, but you would be hard pressed. He
Hey man,
made
look,
so many freaking mistakes that I'm not even going to go into it.
Roy, let me stand up for Dan Schulman. Okay, he was CEO when PayPal was $300 a share. This Chris guy, I know he's your relative and all, but PayPal is $70 a share. Dan Schulman was CEO when it was $300 a share. What do you have to say to that?
When Dan Schulman left, it was not $300 a share, and he left the biggest freaking mess. Like you can basically, Alex Chris comes in, and I'm thinking the way that Dan Schulman's talking and the leadership's talking, that the company just needs a few tweaks. Maybe in a year the turnaround will be good. Alex Chris comes in, does a diagnosis, and is like, yeah, there's a lot of strengths here, but boy, we got a lot of freaking work to do. And I like seriously, it was just case in point. They would buy and way overpay businesses. Now, early on, they weren't doing this. They bought Braintree and Venmo, great buy. They had some other good buys as well. But largely what they would do, even with Venmo and Braintree, buy it and say, okay, great, guys, we bought you. Now go do whatever you want. No vision for a cohesive ecosystem, even to the extent where they would have like an HR team that's separate for like Venmo and PayPal, even though it's the same company, even to the extent where they would have Venmo compete directly with PayPal. When segments of your own business compete with your business, you are doing it wrong and you need to be fired. It's terrible. No, he is not. We look somewhat similar. He's better looking and sharper and richer than I am, but I am his junior brother in that way. But no, not really. But no, Dan Schulman left such a mess. Overpaid after overpaid, no vision at all. Tanked PayPal, tanked margins. There was PayPal back in like 2018, 2019 was a clear leader, dominant in the space, well respected and growing rapidly. COVID gave them a sugar rush. And I don't know what they were thinking. Like, look at the earnings day that they had, not earnings day, investor day. They might as well just have had a kindergartner fill it in with crayons. That would have made more sense than what they put out at the time. I wish I caught wind of it. I wish I was investing at that point in individual stocks. I may have just shorted, honestly, PayPal at that point because it was it's like, hey, we're going to get these amazing numbers. There's no plan. We're just going to do it. Yay.
Yeah.
So Verizon, I don't think is necessarily doomed. If Schulman starts out the way he did at PayPal, at least for the first few years, I think you'll have a decent CEO. I would not want to hold that company long term. I don't know what went wrong with Schulman. Maybe it's personal stuff. But like, dude, seriously, like PayPal was so horribly mismanaged, and this is the same guy, and he's going to take an okay business in Verizon, maybe do okay things for a couple of years, buy some stuff, get some rumors started. Maybe the stock price pumps for a bit. Get out then. Not financial advice, but if I was holding Verizon, that's exactly what I do. In fact, I probably would have sold on the news here.
Wow. Yeah.
Sure. One last thing. Schulman brought in a whole bunch of execs in the C-suite. You know how many were left after the first year since Alex Chris got in? There was literally one guy who previously worked at PayPal that was left in the C-suite. Everybody else gone. Everyone. There were some decent people there, but man, they were so disjointed as a culture and as a business. I've never seen anything like that. And so basically, Alex Chris had to do a freaking reboot of a company that should have been a juggernaut in the space, was so well positioned, and Dan destroyed it.
So, okay. So are you shorting Verizon then?
No. They're I would never, not short it at all. But Shulman, man, I don't know what they were thinking. Like the stock even tanked when they announced it. It's like people know this guy was a disaster at PayPal. I don't know what was there not somebody better.
Yeah, yeah. Then Shulman is okay. Well, yeah, you could wake Roy up at 2 a.m. and ask him about Dan, and he would go for 30 minutes. So this man is traumatized. He's got some PTSD from the Shulman days, and he still owns PayPal. And I think that is what we will end on. Bosnia Herzegovina, beautiful country. Sarajevo is very nice. Verizon is not what it used to be. Went from bad to worse. And I think this comment sums it up the best. Hold on. Where was it? It was just hilarious. I'm not going to find it now, but basically said like, hey, Shulman and Verizon are perfect for each other. They're both kind of slow and kind of old.
Well,
so thank you everybody for watching this 2-hour and 40-minute stream. I appreciate you all. Even though I'm tired right now, I'm kind of cranky and hangry for sure. Shulman is the GOAT. Please talk. Please talk to Roy. Yeah, Roy relaxed again. And please don't ask me any other questions because I will actually stop and try to answer your question. And I'm going to end the stream now. And I'll see you next week on Bootleg Weekly. Myself, Travis, and with my colleague Ron talking about Verizon and other boomer stocks, other dividend companies, Verizon and NVDA. And follow us on whatever channel you're watching, and also on Fridays where we do our other show with our friend Lori called FinTech Friday. Am I late? Just a little bit, just a little bit, Sway. Yeah. Thank you very much. See you next time. Bye-bye.